markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After yesterday's hotter than expected CPI report and the sell-off that we saw in stocks, the major averages right now, they are mostly higher. The Dow's given up some of the earlier gains. Right now, up just 22 points, 38,296 on the index. S&P 500, 16 points higher. That's up 0.3% at 49.69. The Nasdaq 100 right now up 53 points. That's a rise of 0.3%. We have yields lower after yesterday's surge. The two-year, which is a more policy reactive, that's down 7 basis points right now at 458. And the benchmark, the 10-year, that is down 3 basis points right now. We're at 427. And after their earnings reports, shares of Lyft 31% higher. Uber is up 11, well, make it 12%. Airbnb shares, those are down 4% right now. Let me check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you very much. Alex Steele here, Paul Sweeney. This is the Bloomberg Intelligence radio show. We bring you all the best analysis from our amazing Bloomberg Intelligence crew all across the world. 2,000 companies, 130 industries. You want to know about it, they cover it. I want to know what's up with Kraft. So that stock is moving a whopping 6%. It's down 6%. Organic sales decline wasn't so great. It was a lackluster end to the year, and that's really dragging on sales. So what's up with that? Let's go to Jen Bartashis. She is Bloomberg Intelligence Senior Analyst, Retail Staples and Packaged Foods. Jen, what was just so bad about Kraft?
Well, the big surprise for Kraft was that volume was down, which was not a surprise, but it was down more than prices rose. And that really put pressure on the ability to generate sales growth. And so organic sales were negative for the first time since 2020. And although there's some momentum in the business, it's got people concerned.
So, Jen, as I understand the packaged food business from reading your research and talking to you, I guess post-pandemic volumes are down, but they've been able to make up for it by raising prices more. So is that game kind of played out now?
Yeah, basically, a lot of these companies have run out of their pricing power. And what that means is, they were able to raise prices because their input costs were higher, whether it was ingredients or transportation or packaging. But as inflation is coming down, they're losing the ability to pass through additional price increases, which means that if you want to have top line growth or organic sales growth, you have to have positive volume growth because you're not getting it from just higher price anymore. And the problem Kraft Heinz has right now is that volume is still down, price is lower than it's been, and they're not seeing that bounce back in volume that typically lower pricing would encourage.
Okay, so a couple things to focus on. Let's go to the product side then, because you mentioned that a few times. So volumes are down. It doesn't seem like that's just a pricing power thing. Do they not have the right products right now?
Well, I think their portfolio is actually pretty good. It's just that the consumer is not buying as much as they were before. So if you think back to pre-pandemic, people had huge pantries and everything was stocked. They had lots of boxed goods in there. And now people are still a little bit more conservative and buying more on a need basis rather than a stockpiling basis. And so until people start to bulk up those pantries again, it's hard to entice them to buy more than what they just need for this week.
So as I look at the analyst forecast, Jen, I kind of see the 1.5% to 2% to 2.5% revenue growth in the next several years. That really is the story for most of these consumer packaged goods companies, isn't it?
It really is, especially for companies where the bulk of their portfolio are what you would call center of the store items. So that's the canned items, the boxed items. That type of outlook for top line growth is pretty much in line with where you would expect normal inflation rates to be. And so that in and of itself is probably a reasonable expectation for where these companies can go over the next few years.
Do you think that prices then will come down, or do you think that they stay sticky?
Prices will slowly come down. Retailers are looking to pass through cost savings to their customers. So there will be higher pressure on packaged food companies to lower prices as well. And as their input costs or their packaging costs come down, it's harder for them to justify holding prices at a higher level and not passing through some of those savings. So while prices may never come back down to where they were pre-pandemic, they should come down a little bit from where they were in terms of peak pricing in the last 18 months.
A little bit.
I know.
I don't know if we like a little bit.
No, we don't. And
Yeah.
that's
the problem.
That's a problem. That's a problem for a lot of people, and it's a problem for the politicians who are saying inflation's still a bad story here. So, all right. So, Jen, with these names like Kraft Heinz and General Mills and Kellogg's, I got a low single-digit revenue growth. I'm looking. I got dividend yields for Kraft Heinz about 4.7%. I mean, what am I owning this thing for? Am I owning it for single-digit kind of maybe stock price return plus some dividend yield, and that's my game?
That's probably the value play at the moment, right? Meaning you've got steady, kind of slow and steady growth. You've got a reasonable dividend. They do share buybacks, so there's some shareholder benefit there. And as consumers start to pick up their spending, then we may see a better outlook for these companies as well.
Who does Kraft? This is a really dumb question. Who does Kraft compete with? Like the Coke and Pepsi. I know that Pepsi was all like snacks, but they have the soft drink business. Who's like a straight up Kraft competitor?
Someone like Conagra would be
okay.
Or Campbell Soup. Those would be kind of those center type store companies that would compete most directly with the Kraft Heinz.
Hey, Jen, I look at the holders list here, and I forgot about this. Berkshire Hathaway, Warren Buffett, by far the biggest shareholder of this company with about 27% ownership. What has Berkshire Hathaway publicly said about this investment? How long have they owned it? What do they say about their stake here?
Well, they've been involved for a very, very long time.
Okay.
Haven't made a lot of public comments lately, but when Kraft Heinz began its transformation plan, which was now a little over 3 years ago, Berkshire Hathaway was very they were very positive on that transformation story. And to be fair, Kraft Heinz has executed on that transformation plan and generally ahead of schedule when it comes to cost savings initiatives, streamlining things, rebalancing their portfolio. So they really have been sticking to that plan and delivering ahead of schedule. It's just that it's a multi-year process.
Right, and it's a tough time, and I get it, and there's inflation, and then there's the demand. Do you think that the stock move, I'm just looking at the chart here, is it overdone?
Well, part of it is the concern about the volume. And when they gave their guidance for 2024, the company actually said that they think volume is going to shift to positive growth in the second half of the year. That seems like it might be overly optimistic and is probably part of what's contributing to that stock decline today.
So, Jen, in your coverage area, you got the staples, the packaged food companies. What's the kind of the best idea? What do you talk to clients about most often?
Well, right now, we're talking to people about, who is it that has taken the least amount of price increases over the last, say, 18 months, and where are volumes holding up? Because to be successful over 2024 and into 2025, it really is that question of how are you going to actually drive overall growth and profitability. And so the companies that have been more conservative and been more prudent in that approach are the ones who are positioned right now to maybe benefit from that.
So you have
benefit from those actions.
What's a representative name there?
So a good example there would be Mondelez, where they took a lot less price than and actually the spinoff from Kraft Heinz.
Oh, that's right. I forgot about that.
Yeah, but they've been a little bit more prudent in terms of their price increases, and what we've also seen is that their volume has held up better. Hershey is another one where their volumes have held up, and part of that is that people love their chocolate.
That's true. I don't care about
those are
flowers.
a couple of examples.
But I'll definitely take
we're learning a lot about Jen. We're learning a lot about Alex and her Valentine's Day preferences. So flowers, no, but chocolate.
Well, I don't want anything. I think it's stupid.
Anything.
But
it's stupid.
If one
She's
was
trying
to
to
get me
portray
something,
herself as like this simple girl, no demands. I don't buy it for a minute.
Simple girl? What? No. Do I like Valentine's? No, it's dumb. But will I eat chocolate? Absolutely, as long as it's high-end dark chocolate. Hey, Jen, what's something you really don't like right now? Like, what's sort of a negative trend? Because I am also trying to understand for some of these names the normalization that we've seen. Sort of backtrack the last 4 years and erase that, and that's where we have to kind of pick up and go from there.
Well, I think one of the things that is an issue for the industry is that everyone still believes that they can optimize their portfolio and that they're going to find a buyer for the products and the product lines that they don't want at a good multiple. And at the end of the day, there aren't a lot of buyers out there for categories that are slow growth or declining. And so there's maybe a little bit of a mismatch in terms of the belief that they can streamline their portfolio, get all the value that they think they deserve out of it. And yet I don't see a whole suite of buyers lining up to look at those products.
Hershey, this company went public in 1927.
Oh boy.
They did one follow-on offering. And then for about a period of about 12 months in 1993 or 4, we pitched them hard on doing another follow-on. We actually had a good analyst on the name in the company like this. We went to Hershey probably 6 or 7 times in the space of a year, pitching a follow-on offering, nothing. Didn't get paid, but got to Hershey and got a lot of Hershey chocolate. There's that. So Jen, what does a company like Hershey do? It's one of those things. I know they've gotten bigger through some acquisitions, but they're still relatively a small player relative to some of the other big names. But is their brand so good that they can kind of remain independent?
Yeah, I believe that the Hershey brand is really iconic, and if you think about some of their biggest chocolate lines, there really aren't a lot of mass targeted competitors out there. So people may prefer the higher end, Alex, but but when it comes to kind of that mass market, it's hard for an external brand to come in and get the kind of penetration that Hershey has. And in addition, Hershey has really done a good job of diversifying into the broader snacking. So they own popcorn brand, they own pretzel brand. So they've done a good job of diversifying, and that'll help them with their long-term growth as well.
Really interesting. I'm surprised that John Tucker didn't have some weird factoid about Hershey, Pennsylvania.
Well, they have the Hershey school and all that kind of stuff. And,
yeah, but I mean, like weird off the beaten track, like
I
here's where the cemetery was.
I don't have any
horses
fun
or something.
facts about Hershey, but I suspect it's out in that region of the world because there are lots of farms and milk cows that give milk and stuff.
I could have told you that. All right.
All
Hey,
right.
Jen,
Well, I
we
didn't
we really appreciate it. It's so great to catch up with you. Such wonderful analysis. Jen Bartashis, Consumer Staples, Bloomberg Intelligence, Senior Industry Analyst, and she covers everything food related, which is just such an
and what
interesting
I learned from
business.
her years ago, which still shocks me to this day, is the #1 supermarket chain in the United States is Amazon.
What? No.
I mean, Walmart. I'm sorry, Walmart. Sorry,
Oh, okay,
Walmart.
okay, that makes more sense.
Yeah, sorry, Walmart.
Right.
And I forgot about that. But when you do go in there, they're just massive square footage.
It's huge.
Yeah.
I mean, isn't that where they make the majority of their money? Or
I think
volume,
that, no,
I guess I should say?
I think it drives traffic, and they make it on it because I think supermarkets. I think the margins are really, 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 really low. So you make it up on volume, and you bring them into the store, and they buy other stuff. So, all right, we'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. After yesterday's sell-off, major stock averages are higher, although they have shed some of the earlier gains. You had 8 of the 11 major industry groups in the S&P 500 higher. Meantime, Brian Levitt at Invesco was asked this morning, what's in the driver's seat for markets?
Well, the driver right now is the fact that we're backing out some of those interest rate cuts. So you've seen a more concentrated, higher quality market. I think what you'll see over the next year is this economy will slow, rates will come down.
And among the individual stocks on the move, trading app Robinhood Markets and ride-sharing app Lyft jumping after posting better than expected results. And then by contrast, you have Airbnb falling. The travel company warned of weakening demand. Shares of Airbnb right now down 3.2%. Overall, S&P 500 up 22 points, a rise of 0.5%. We're at 49.75 in the index. The Dow Jones Industrial Average up 42 points. The NASDAQ 100, 91 points higher. That's up 0.5%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
Thank you, John Tucker.
Okay.
He looks at us like he's testing us.
She's so simple.
Do we see that? My husband would totally disagree with you. Okay, let's get to the markets here. As John Tucker was just talking about, the S&P is up 0.4%. You know, I kind of felt like this was going to happen yesterday when we had that big sell-off, particularly as we closed off the lows. But the question is, how sustainable is this sort of buy the dip narrative? So let's ask Nancy Davis, founder and CEO of Quadratic Capital Management. She joins us now from Greenwich, Connecticut. Nancy, how do I understand the price action right now on the main index?
Well, Alex, I think you said it well. It's a little confusing. I mean, it's basically good data yesterday. We had a stronger inflation, less Fed hike or Fed cuts, and that's what's kind of fueling the market. The market's on hope right now that the Fed is going to ease rates and save everything from being overly tight.
So, you know, I'm looking at the bond market here because, boy, in 2022, the bond market just got crushed. There's no place left to hide. The 60-40 portfolio did nothing for you. A little bit of positive performance in last year, thanks goodness to November, December. But here we are starting off the year again in the red for fixed income. What do we do on the fixed income space, Nancy?
Well, it's tricky because the U.S. yield curve is so incredibly inverted. So what that means is that longer dated interest rates are anticipating the Fed will aggressively cut rates, and everybody in the bond market is kind of holding out their hands saying, okay, cut now. And the market being inverted, you're getting paid less yield to take more duration risk. And so the market has been rushing into credit, private credit, public credit. So credit spreads are incredibly tight, right along with their, corporate cousin equities. So those financial assets that are at all-time highs. And then if you look at the, treasury market, you can buy a 1-month T-bill and get paid 5.4%, or you can lend money to the U.S. Treasury for 10 years and get over 1% less. So it's a really crazy environment because the yield curve is not normally this inverted for this long. And it's really, I think, a message to bond investors that you're not being paid to take duration risk.
So it's funny you mentioned that because a week ago, the conversation was, okay, my 3-month T-bill was up. What do I do with the money? Do I go into equities now? Do I do something else? And now it's like, woof, nope, gotta stay, because that the money market funds are just really too attractive. How do you then navigate an environment where we're going to get 3 cuts, maybe, for normalization rather than something more dramatic?
I mean, I think most people do have equities in their portfolio, and the equity market is really hanging on to this premise that the Fed is going to cut rates. So I think it's reasonable to have some short-term treasuries, and I don't think you're really getting paid for the risk to take credit risk, because it's similar, if you think about owning a corporate bond and owning a corporate stock, it's a similar corporate beta, and corporates are really expensive right now. So I think it makes more sense to just have treasury exposure and not add that credit risk into your bond portfolio because you already have it on the equity side.
You know, I was surprised last year when we did get some decent performance out of fixed income that high yield was the real outperformer. And I would have thought with all the discussion of, everybody talking about a recession right around the corner that you wouldn't want to take that level of risk. What happened in the high yield space? And I assume, just by your previous comment, that you're not being enticed by the high yield space this year.
Yeah, I think high yield, investment grade, pretty much anything with a credit spread, what you want is credit spreads tighter if you own bonds with credit risk. And credit spreads are near, their 10th percentile of all-time tightness. So, especially I think I caution people, it's not just high yield, it's also short dated. A lot of people have been going into short duration funds. And if you look at your short duration funds that take credit risk, IG credit spreads are around 30 basis points for the 3-year point. It's even tighter when you go closer in. And there you need a company to amend or extend, right? They either have to pay back the loan or they have to term it out. So it's a really, it can only go to zero, right? So there's very little, you're taking a lot of risk and not getting a ton of return. And so going back to those T-bills, yeah, maybe the Fed is going to cut rates, but then you should be okay on your equity side of the portfolio. And if they don't cut rates, you don't have that reinvestment risk. So I don't think T-bills, they're boring and they're not super exciting, but I don't think they're bad. Yeah.
You also mentioned here in your notes the fiscal situation and watching the deficit. I feel like yes, except no one seems to care. So what do you do with that?
Yeah, no, Alex, you're exactly right. Nobody cares. But I think that's also the time when nobody's talking about something. It's important to be mindful of it because usually that risk is not priced. The Treasury Department does have to refinance a tremendous amount of debt. We have a ton of fiscal spending. We have an election year. There's really even no election premium priced into the volatility markets. I mean, talk about pulling my hair out. I want to grab people and be like, what's wrong with you? Do you realize what's around the corner and what we're going to be facing? So I think that's the time that investors, in all markets, you want to buy things that are low and sell things that are high. And there's certain things in the fixed income markets that are really inexpensively priced. And then there's 90% of the market that's really expensive. So you want to kind of avoid the expensive stuff and buy the cheaply priced things, in my opinion.
So what is the Fed going to do this year? I guess obviously the March cut is off the table. I think people are now really debating May and maybe even suggesting June might be might be the launching point. What do you think?
I think it's really hard to predict what policymakers are going to do, and then it's even harder to predict what markets are going to do in response to that policy, because it's all related to expectations, right? If we rewind before the Fed started hiking rates and the dot plots started to come out higher, I don't think any economist out there would have said, okay, the Fed's going to hike to 5.25 in about a 12-month window. I think nobody was talking about that. And now everybody is talking about rate cuts. It's just a question of how many, how quickly, and when is it going to happen. I think we also have to be mindful of the Silicon Valley swap lines. So the BTSP program is expiring in March. That's put a ton of liquidity out there in the system. That's going to be coming out. So I think there are a lot of things out there that are catalysts to make markets more normal in fixed income. I think having an upward sloping yield curve, that's not some kind of tail event, right? That would just be normal. Like in normal environments, when you lend somebody money longer, whether it's a sovereign or a municipality or a corporate, you typically get paid more interest to lend longer, right? Because it's more risk. Right now, we're not seeing that. So I think there are a lot of ways to kind of play for a more normal market, and it doesn't necessarily have to be dependent on, the Fed just cutting rates, because I think the longer the Fed pushes off the rate cuts, the more the economy, especially all the corporates out there that have debt, will have to refinance. So it could potentially be higher for longer, means more cuts faster later because the economy is really slowing. So I think it's tricky there.
All right, Nancy, we appreciate it. Nancy Davis, founder and CEO of Quadratic Capital Management, talking about fixed income. And then also you layer in the election timetable and the idea that the closer you get to the election, then the more you cut, the more it looks political. And that kind of changes the framework, too, a little bit.
Yeah. So I think if you start, maybe that takes some of the political risk out of you start
potentially.
Early, so see how it plays out. Well, more coming up. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And I'm John Tucker with a look at some of the companies we're following. Rourke Capital, here's one for you, Paul. In the early stages of weighing an initial public offering of Inspire Brands. You might not know them, but they're the owner of Dunkin', Arby's, and Michael Barr's favorite restaurant, Jimmy John's.
Yeah.
Rourke.
Okay, I love Jimmy John's.
You do?
I
Yes.
have no idea what that is.
Oh
Never
my
been
God,
to
the
one.
best.
Anyway, Rourke created Inspire back in 2018 as an owner, operator, and franchisor of a portfolio of restaurant brands. Its holdings also include Baskin-Robbins, a Sonic Drive-In, and Buffalo Wild Wings. You might recall back in 2022, Inspire bought Dunkin' in an $11 billion take-private deal. That became one of the largest ever restaurant transactions. The Dunkin' ticker used to be, what?
D-U-N-K-N.
D-U-N-K. Was it?
D-U-N-K, okay.
I guess they're going to maybe reclaim that at some point. Lyft projected adjusted earnings as much as 11% higher than analyst estimates and reported bookings ahead of expectations. And then there was the outlook for profitability. Margins, the ride-hailing provider said in the initial press release, were set to expand this year by an eye-watering 500 basis points. Shares surged, jumping 67% after hours trading. But that projection was way off. Way off. It was supposed to read 50, not 500 basis points. And Intel seeking to raise at least $2 billion in equity to help fund a semiconductor fabrication facility in Ireland. The chip-making giant, which is working with an advisor, has begun soliciting interest from potential investors. What do they call them? Fabs? The facilities?
Yeah.
Okay.
Yeah.
Anyway, let's look at some of your company news. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, for those of you who don't know Jimmy John's, it's really good. Their tuna sub, excellent. This is my college days, everybody, going back there. I'm Alex Steele, here with Paul Sweeney, John Tucker. This is the Bloomberg Intelligence Radio Show. We talk to all our amazing analysts worldwide. Right now, though, let's go to Michael Barr for world and national news.
Thank you very much, Alex, Paul, John. The special election in New York's 3rd Congressional District means the Republicans' majority is even slimmer, with Democrat Tom Suozzi returning to Capitol Hill, beating Republican Mazi Pilip 54% to 46%. Bloomberg News congressional reporter Billy House says that the finger-pointing is already underway.
Speaker Johnson, who will now be able to lose only 2 GOP defectors on key votes for Republicans, and with this Tom Suozzi victory, he's in a real bind. Republicans will gather this morning here in Washington and kind of start the backbiting, I'm sure, over why this happened.
Bloomberg's Billy House. Suozzi won the seat that was held by expelled Congressman George Santos. By 1 vote, the House approved impeaching Homeland Security Secretary Alejandro Mayorkas over the Biden administration's handling of the U.S.-Mexico border. The Republican majority failed to impeach Mayorkas last week. The Department of Homeland Security says House Republicans will be remembered by history for trampling on the Constitution for political gain rather than working to solve the serious challenges at our border. NATO Secretary General Jens Stoltenberg says European allies and Canada have ramped up defense spending to record levels. He's also warning that former President Donald Trump is undermining their security by calling into question the U.S. commitment to its allies.
And we should leave no room for miscalculation or misunderstanding in Moscow about our readiness and our commitment, our resolve to protect all allies.
NATO's Jens Stoltenberg says that U.S. partners in NATO have spent $600 billion more on their military budget since 2014. And the world's next attempt at putting a robotic lander on the moon will have to wait for at least 1 more day. This morning's planned launch was scrubbed because of a technical glitch. Global news 24 hours a day and whatever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, John.
We complain about inflation. You go to the grocery store and you're worried about it. You know where inflation is really showing up?
Where?
The Tooth Fairy.
Oh, please.
This is a great article from the Wall Street Journal. I appreciate it's a journal article, but it's super fun, talking about Tooth Fairy inflation. So there was a poll last year by Delta Dental, a large U.S. provider of benefits, that said the average payout now per lost tooth is at a record $6.23, jumping from about $5.36 in 2022. But it's not just that. a lot of people are getting things like money and a gift, like a video game or an iPhone or a Louis Vuitton bracelet. There you go.
Are you kidding? I mean,
I'm not kidding.
All right, back in my day, it was a quarter. I think for my kids, we might have gone to like a dollar bill, maybe. I can't remember, but yeah, it's not an iPad. It's not an iPhone or whatever.
We did some like silver dollars for a while.
Yes, we did that too. That's what we did.
We did that.
Yep.
I think we gave her 5 once because she lost like 3 in a row. And now we're like, no, you know it's fake. You're not getting anything. But I just can't be like, here, you're so great. You lost a tooth and you're 4. Here's your iPhone. I'm sorry. I just don't
I tell you another
understand
place
that.
I'm seeing kind of inflation and just over the topness is weddings now.
Oh.
They are like, I don't know. We got married in a church, had a reception, boom. Now they have, these elaborate routines where they come out and do the first dance and all this kind of stuff. It just seems like it's really over the top. It's well done. I mean, the kids have a good time, but it's a real performance, and it kind of feels like people, maybe just people post-pandemic are just looking to get out and go crazy whenever they have a chance.
I mean, with weddings, I feel like it's an entire industry geared towards making money.
Yes.
The tooth fairy feels like something that's made up.
Yeah.
But like you're just
well, we already established that with Valentine's Day. You will not be marketed into an emotion or a response or something like that.
Well, I will not be marketed into feelings.
That's right.
I will have feelings on my own.
On
and
my
I will
own.
feel good about that. Yes,
Very good.
We have learned this.
All right, looking at this market here, S&P up 0.25%. The Dow just kind of dipped a little bit into the red. Balance of power with Joe Matthew. He's down in Washington, D.C. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The Republican majority in the House just got even smaller. Welcome to the fastest show in politics. This day after Democrats flipped George Santos's old seat in New York, leaving Speaker Mike Johnson now with only a 2-seat cushion. Can anything get done from here? We'll talk to Bloomberg Congress reporter Billy House. He joins us live from Capitol Hill in a moment with insights on New York 3 from Don Levy at the Siena College Research Institute. He called the race, and he's with us in just a couple of moments. Analysis today from our signature panel. They're with us both, Rick Davis and Jeannie Shanzano. On our way now to Wall Street, we start with trading, as always, and Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. The day after that CPI report, and we have got stocks now trading mixed. Dow Industrials, they are in the red, lower right now by 36 points. That is a decline of just about 0.1%. S&P 500 index, a little changed, up now by 9 points, up by about 0.2%. NASDAQ higher by 47, a gain right now of 0.3%. We have got the 10-year yielding 4.26% with a 2-year right now at 4.57%. Spot gold at $19.92 the ounce. A little change there, down less than 0.1%. And a retreat today for West Texas Intermediate crude oil. Crude lower by 0.5%, 77.47 a barrel on WTI. Well, lots of controversy surrounding the Lyft earnings report. First of all, we have got Lyft shares trading higher now by 29.7%. A day after a clerical error sent Lyft shares up 67%. The stock is moving higher, and the company is discussing what happened. The mistake overshadowed what was otherwise a solid beat on profit and bookings that signaled a years-long effort to boost ridership and challenge Uber technologies. We had Bloomberg this morning spoke with the Lyft CEO David Risher, and he addressed that clerical issue.
First of all, it's on me. There are a lot of eyes on this press release, but at the end of the day, my bad. But look, I don't want it to take anything away from the butt-kicking performance that the business did, thanks to all of our employees and thanks to millions of drivers. I mean, look, we had our financially strongest quarter we've ever had, and I'm super excited about it.
And again, Lyft shares up now 29.7%. Rival Uber, also based in San Francisco, Uber up by 11.4%. Spot gold lower by 61 cents the ounce to $19.92. As we mentioned, West Texas Intermediate crude down 0.5%. Bottom line here, we're looking at a mixed trading day. Dow Jones Industrial Average is lower right now by 0.1%. S&P higher by 0.1%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, we thank you. Looking sharp in that red tie on this Valentine's Day. You would know that if you were with us on YouTube, and we invite you to go there now. The cameras are lit. Search Bloomberg Global News, and you'll find our live feed with all of our guests and everything that happens here in the studios from Washington to New York. Welcome to the Valentine's Day edition of Balance of Power. We are now down to 2. I was told there'd be no math, but we have to do a little bit today. A 2-vote margin, essentially, for Speaker Mike Johnson. If you put this together, following what happened in New York 3 last night, Democrats flipped the seat that once belonged to George Santos. We are now at a 219-213 majority with 3 vacancies. That means Mike Johnson can only lose 2 to get anything done here. So the walls may be closing in. As for that race, and we're going to talk about that with Don Levy. Aren't we glad Don Levy's back today from Siena College poll? They called it. Tom Suozzi wins, but it was by a wider margin, about 8 points. The poll showed him up by 4. Either way, it changes the math here in Washington, in a Congress and a House that was already having trouble getting anything done. Or maybe we haven't gotten anything done. That's where we start with Billy House, who might be the last person left on Capitol Hill today. Billy, it's great to see you, Bloomberg Congress reporter. If my math is right here, Mike Johnson's job just got a lot more difficult, right, Billy?
That's correct, because although 219 versus 213 is 6 votes, tie votes go to defeat. In other words, you got to get more than a tie if you're going to pass a bill.
There you go. And so we actually saw a tie almost last week when they tried to impeach Alejandro Mayorkas, and Al Green showed up, and things started to get a little more complex. Republicans had to take the fall on that bill so they could do it again, Billy, and it happened last night. This says everything to me. We've had an historic impeachment of a cabinet secretary, the Homeland Security Secretary. He was impeached by 1. That says to me, following the election, that vote could not be duplicated tonight. They actually managed to thread the needle on this, Billy.
You're absolutely correct. I mean, there were 2 votes on both sides of the aisle that weren't, so a total of 4 that weren't cast. 2 Democrats couldn't make it to town, and 2 Republicans apparently didn't want to cast that vote. But you're correct. A margin of 1 is not a big margin.
And now that they've flipped New York 3 to Democrats, that would be a tie again if they held the vote tonight. So good time, I guess, on the part of Mike Johnson. Billy, the conventional wisdom here in Washington is that the impeachment goes to die in the Senate, that we don't even see a trial. What are you hearing?
Well, what we do know from the Senate and Senator Majority Leader Schumer's office is that they do not expect the articles to be, and there's a solemn sort of Masonic march of the articles over from the House to the Senate, if you might remember the Trump impeachments. This won't occur until after the Senate returns on February 27th, and then the Senate would be sworn in as jurors, and a trial will start. Ironically, House Republicans' various impeachment efforts are going to run into each other, because Hunter Biden's supposed to testify in the House on February 28th, so you could have both of those happening at the same time.
Well, we've got a calendar problem again here, Billy, because it's recess time now, and by the looks of things, there's something like 6 legislative days left to avoid a government shutdown, and by the time they come back from recess, there will be only 3. Do we need to start having a more serious conversation about this? I've been asking people every day, and I keep hearing, no, they'll figure this out. But 3 weeks from tomorrow, we start shutting down?
Absolutely. In fact, I asked last night Senior Appropriator Tom Cole, the Rules Chairman, are we going to have a shutdown? He said emphatically no. But what you are seeing when you see the calendar is an impeachment in the Senate, Hunter Biden questioning over here in the House, and just a couple of days before a shutdown. They do have a lot of things going on when they return later this month. A lot of them self-imposed deadlines, and of course the government shutdown ones are kind of self-imposed. They're just, you know, kick the can deadlines that were supposed to be resolved earlier this year.
Well, so speaking of kicking the can, is that what members think? Is that why everyone's convinced that we will not have a shutdown because the speaker will have to cave, do another continuing resolution, which he vowed not to do?
Hey, that's a good question. There does seem to be a malaise or a lack of concern, and perhaps now we've just gotten into a feeling that, well, we can always do another CR. Now, that's what House conservatives get really irate over, but despite all their stomping and fist pounding, they haven't really taken that out on the new Speaker Johnson yet.
Yeah. Well, we'll stay tuned, Billy. I can't figure out how they're going to avoid this at some point in the next several weeks, and we'll remind our viewers and listeners that the State of the Union would only be a couple of days after that, so these all overlap along with Super Tuesday. Billy House, great to see you reporting live from the Capitol. Bloomberg News congressional reporter with love in the air today in Washington on this Valentine's Day. Too bad it's not helping the bipartisanship. Don Levy told us what was going to happen last week in the race in New York 3. He runs the Siena College poll. He's the director of the Siena College Research Institute. And Don, it's great to see you. I'm glad you came back because we do have questions about the way this all came down. You were inundated with a big snowstorm up there yesterday, and I'll remind everybody that this is the seat once held by George Santos. We were told that George Santos may have ruined the district for Republicans for some time, and it seemed to not be a great factor in this race, Don. It came down to a lot of national issues like the border, like spending. And it's been interesting, Israel as well, to watch this whole thing shake out. He won by more than you thought, didn't he?
He did. Tom Suozzi ended up winning by just a little bit under 8 points. We had him at about 4 points. And he overperformed really relative to our poll in both the Queens component of the district, which is about 20%, actually showed up at the rate of only about 15% last night. And Nassau County, 80% of the district voted at the rate of about 85%. And Tom Suozzi is a known quantity within that district. He's been active in Nassau County politics now going back 20 years. So the voters there, most especially in Nassau, but also in that small section of Queens, certainly knew him. He served 3 terms in Congress. So they were prepared last night to send Tom Suozzi back to Washington.
Well, Siena did the work there, and I hope you're taking a victory lap today, Don. I wonder to what extent turnout factored into this. That's all we heard about all day was the weather.
Well, I think the weather did have some effect. As you know, Democrats turned out very strongly in the early voting. And when the early vote came out last night, you saw the Democrats and Tom Suozzi take an enormous lead. Republicans do quite well in same-day voting, but certainly there was just not enough same-day Republican vote. There's a couple of sections of the district, the southern section of the district, Massapequa, Levittown, where the Republicans were a little unhappy with the degree to which they got turnout. In fact, they went out and hired private snowplows to try to clear the roads to encourage that turnout. But they were a little bit deflated with the same-day turnout. And as a result, whereas we had Tom Suozzi in our poll carrying Nassau by about a point, he ended up carrying Nassau by about 5 points. And to some effect, that was turnout. But I think there was more to it than that, actually. I think that this closing week of the election and the build-up to this special election, Tom Suozzi did a fantastic job closing. He took the immigration issue on head-on, what was seen as a weakness for Tom Suozzi. He ended up turning into a strength, perhaps in part aided by the bill in the Senate actually dying, the bipartisan bill, which he said he was a strong supporter of. Mazi Phillips said that she was opposed to that. That didn't play well with this bipartisan spirit that exists in New York 3.
Well, Donald Trump says it was all about him, Don, and I'm guessing you've seen the post by now referring to Mazi Phillips as foolish. And he's, of course, making the case that she didn't use him enough or lean into MAGA. He says, running in a race where she did not endorse me, tried to straddle the fence when she could have easily won if she understood anything about modern-day politics in America. To what extent was there a Trump factor or lack thereof in New York 3?
Well, our polling continued to show that Donald Trump was unpopular in the district, about as equally unpopular as Joe Biden. I think that's a bit of Monday morning quarterbacking. Mazi Pilip did straddle the fence, though, and really, I think, didn't close strongly because of that. Her position on a national abortion ban, and previously in New York, abortion, while an important issue, didn't seem quite as salient because in New York, most people feel as though a woman's right to choose is sacrosanct. But to the degree that Mazi Pilip was identified as potentially being a vote for a national abortion ban and not really taking a razor clear position on that hurt her in the final week. Santos on the other side, Suozzi on the other hand, took a very strong position on abortion. And so between that classic Democratic position of support for abortion rights, as well as Suozzi taking the immigration issue on head on, allowed him to close very strongly in the race.
Well, he's got some people calling this the recipe to win for Democrats here in November, Don. I wonder your thoughts on that, because he called out Republicans on that border plan that collapsed, the compromise that never got a vote in the House. Is that going to be the model going forward?
Well, certainly I think in swing districts, and we've got about 5 of them here in New York, this idea of getting something done, whether it's getting something done on the border, which is paramount right now, but getting something done across the board. The issue could be Ukraine. It could be Israel. It could be keeping the government open. Tom Suozzi did a great job saying, I am a bipartisan, hardworking representative, and getting something done is what has to happen. So when you look to a couple of the other districts in Long Island, a couple of districts in the Hudson Valley, certainly the Republicans who occupy those seats right now are taking notice and are going to have to pay attention to how Tom Suozzi closed against Mazi Pilip, including saying, immigration, I'm for a bipartisan agreement. Let's get something done. That worked for him.
Talking with Don Levy of the Siena College Research Institute. As we look ahead to fall, and this is going to be a quick turnaround here, Donald Trump said something else in his post. Give us a real candidate in the district for November. Suozzi, I know him well, can be easily beaten. And I wonder your thoughts on what Republicans might do as an answer to what happened here for the full-blown election, but also the extent to which redistricting could play into this, because it's supposed to go back to making this an easier fight for a Tom Suozzi or any Democrat, isn't it?
It is. Redistricting is still a little bit up in the air here in New York. There's talk that there's a compromise. I think that this particular district will end up being, if not safe, I think this will be a lean Democratic district, and Tom Suozzi is going to look pretty secure. More than likely, New York State Democrats, Republicans who are interested in holding some of these other seats are going to look to the other couple of districts on Long Island, as well as the Hudson Valley districts, to try to hold those, and probably are going to end up conceding this district. Mazi Pilip has said she's going to run. There could be a couple of other Republicans who are going to throw their hat in. But right now, New York 3 looks like it's Tom Suozzi's to hold.
I've only got a minute left on. I don't want to set you up here, but I wonder if you buy the bellwether talk this morning, the extent to which New York 3 is unique or something we can read into nationally.
I don't think we can help ourselves. We're going to read into it, but it was a special election. Had a slightly more than 25% turnout. These are the most engaged voters. Democrats have been doing well in these special elections. But as far as a bellwether, it's something to look at. It doesn't necessarily foreshadow exactly what's going to happen, because as you know, there's going to be 1,001 things that are going to happen between now and November. And Donald Trump and Joe Biden will be on the ballot then, not only Tom Suozzi.
No, keep that in mind when you hear talk of bellwether throughout the day, because Don knows what he's talking about. Really glad you can come back and talk to us. Don Levy is director of the Siena College Research Institute, the man who called the race for us last week. And nice to get some insights on the back end of that. We're going to add Wendy Benjaminson to the conversation coming up here in hour 1 of Balance of Power, the fastest show in politics. And I'll give you a heads up, the beginning of next hour, roughly 40 minutes from now. Congresswoman Abigail Spanberger will join us from Capitol Hill. You won't want to miss that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 12:21 the time right now on Wall Street. We are looking at a mixed market. We have got the Dow Jones Industrial Average lower. The S&P and NASDAQ, they are both advancing right now, looking at a 0.3% gain in the NASDAQ Composite Index. That index up now by 60 points. Perhaps the bigger story today is what's going on with the Russell 2000. It is up by 1.3%. The Dow in the red, lower, little change right now, down by 7 points. S&P, to put it all in context for you, up 14 points. That is a gain right now of 0.3%. Equities snapping back after that slide yesterday that was triggered by a reset in Federal Reserve rate cut expectations after the CPI report. 10-year now at 4.26% with a 2-year that's yielding 4.57%. Gold down $2 the ounce, down by about 0.1%. Spot gold at $19.91 the ounce. And West Texas Intermediate crude pulling back by 0.7%, WTI 77.24 a barrel. PNC Financial Services Group says it's going to spend about $1 billion to open new branches and renovate existing ones through 2028. The plan calls for 100 new branches in Austin, Dallas, Houston, and San Antonio, as well as Denver, Miami, and other locations. PNC shares today, they are up right now by just about 1.2%. Recapping, Dow lower, stocks mixed, S&P higher by 13, up by 0.3%. I'm Charlie Pellet, and that, Joe Matthew, is a Bloomberg Business Flash.
Hey, Charlie, thank you. Welcome to the Wednesday edition of Balance of Power. Happy Valentine's Day. I'm Joe Matthew in Washington, where, as I say, we're feeling the love today, just like always in Washington, where no one can get along. Chuck Schumer calls it a sham and another embarrassment for House Republicans. I'm not talking about the fact that the border deal fell apart, or that the supplemental won't get to the floor, or that the government might shut down in 3 weeks. We're talking about the impeachment of a cabinet secretary. It did happen last night. Alejandro Mayorkas, now at the point of pride, impeached by a single vote. 214-213. Yes, Steve Scalise is back. And no, it couldn't happen again tonight after what took place in New York 3 last evening. Pretty remarkable to think about. It's all about timing, as they say. Joining us now at the table is Wendy Benjaminson, Washington senior editor. It's good to see you on this day after, I guess, history was made last night. They came close 150 years ago, but the guy resigned before they got to it. Alejandro Mayorkas will not be put on trial in the Senate, though.
No, he will not. The Senate, which is run by Democrats, therefore, they're much more sympathetic to Mayorkas. They will acknowledge receipt of the impeachment, which, just to remind people, is analogous to an indictment. Then he would have to stand trial in the Senate. The Senate will basically acknowledge receipt of the impeachment bill, legislation, resolution, and then they will put it in a file drawer. This is where it ends.
It goes to committee to die, or can they actually dismiss this thing?
I think it will go to committee to die, or they may send it to the committee, and then the Rules Committee will never put it on. It will never come up again. So I don't expect to see much more of this. Which is what Schumer was talking about there, which is, they didn't pass the border bill, even though it had a little something for everybody in it. And then they spent time trying to impeach this cabinet member. And Tom Suozzi then used all of that to his advantage to win a congressional seat for a Democrat.
It's pretty remarkable what's happening under our feet here, and looking forward to talking with Congresswoman Spanberger about this next hour, because we're hearing about a lot of crazy stuff, which tends to happen in times of chaos like this. Discharge petition, motion to vacate, just signs that we're in total dysfunction right now. And you wonder if we are heading for a shutdown if we can't get anything else done.
Right, exactly. And then if the government shuts down, or even if it doesn't shut down, there are Republicans who may file that motion to vacate that you mentioned and fire Speaker Johnson, making this, the third or fourth speaker that the country will have had. And let's not forget, Speaker of the House is third in line to the presidency. It's not just a small job. It's very important. And as we were talking about during the break a little bit, this is why it used to be that the only way to become speaker was to work in the trenches, to be a committee chairman, to become the whip, to become the majority leader. And then you would get elected speaker. And now they're sort of going, well, who wants it?
Yes, right.
And backbenchers like Mike Johnson suddenly are Speaker of the House.
A lot of folks think he might keep the job for that reason, because there's just no one else
that may
who
be.
would take it. I don't know if that's true or not. You do wonder about the rest of the leadership, though, following failed votes last week on Israel and some of the trouble they've had whipping.
Right.
If this becomes more of a leadership problem than a speaker problem.
Right. That very well may be.
So he vowed, though, to not do another CR. He's vowed that several times.
Yes.
Is that the sin that potentially gets him fired? Is he keeps the government open?
Who knows? I think the sin will be whatever the House Freedom Caucus, these are the ultra-conservative or MAGA-type Republicans who are always sort of biting at his heels. It's whatever sin they see in what he's done that isn't exactly what Donald Trump wants, that isn't exactly what they want, that isn't taking a fighting stance with no compromise. And if he doesn't do that, which is probably why he doesn't want a continuing resolution anymore, then he's in danger of being out of a job.
Well, Tom Suozzi showed Democrats that they can make hay out of the border last night.
That's right.
Interesting. There's a lot of talk about bellwether. I don't know if you buy into it, but this could be a recipe for future successes for Democrats here. And it makes me wonder, Wendy, and I'll be curious to ask Rick and Jeannie about this coming up too. Can we now say that voters are savvy enough to tell the difference here, to know what actually killed the border deal? Because Tom Suozzi was talking about it all along.
He was, and he did. I think that was part of what his victory was, that he said, hey, we had a border bill.
Yeah.
They, the Republicans, killed it.
Right.
So if you want immigration fixed, maybe look to us, which is a little sleight of hand if we go back to how this all happened.
Fair enough.
Voters didn't think the Democratic administration or Democrats in Congress were doing enough on the border. Republicans filed a bill. There was a compromise, bipartisan compromise that was reached. But then Republicans took what could have been a win, saying, we proposed it, we fixed it, and they killed the bill, impeached the cabinet secretary in charge of it. And so, yes, Tom Suozzi was very smart to say, hey, we were willing to fix it, and the Republicans killed it.
He was
Whether
also willing
Democrats
to call
will do
out
that.
his president.
Yes, he
and
was.
I suspect we're going to see a lot of that.
I suspect we will, unless the DNC or Biden really cracks down on that, or the White House changes its tune on immigration. But immigration is increasingly, according to our polls, a top issue for voters. They are seeing it either through, cable streaming television, on national news programs, even if it's not directly affecting their states. But the states it is affecting now are not just the border states, which tend to be Republican. It is Chicago, it is New York, and that's hurting Biden a lot.
Well, yeah, it was, you're right. Everything, I guess, everywhere is a border state, as we hear from a lot of Republican governors now. Though it is interesting to hear this debate in an affluent community on Long Island, where they could also, they may as well be talking about the Connecticut border in that race, but we're not here. So a couple things can happen then, to your point. Joe Biden can take action to maybe cover himself on this through executive order, or God knows what they might be cooking up at the White House, because there's clearly no legislative solution here in the near term. Or he's not on the road campaigning for candidates this year.
Right.
And presidents know what that's like to not be invited.
Right. And they have, he has been through that. I mean, he did that during the pandemic, of course. In 2020, he wasn't out there campaigning, and yet he still won. I think he may not be out campaigning a lot. We do know that we certainly believe that the White House and the campaign want to sort of not have him out 24/7, because he gets fatigued and then forgets things. But if they don't want him, he can make excuses, but it's not going to look good.
In places
we will
like
point it out.
New York, he may not be invited.
He may not be
realizing
invited.
there are going to be blue states where he's going to show up as a star and make an endorsement.
Sure.
But New York in particular is an example of where that might not work, isn't it?
It might not work, you're right. And that's going to be really, really hard for him. And remember, people may vote for their congressman and then feel unenthused about the presidential vote. So
some of the numbers that we saw in New York 3 are interesting here. Remembering Joe Biden won the district by 8 points in 2020. The latest Siena College poll, we were just talking to Don Levy, has Trump leading Biden by 5 points in that district. Could we be in a world where Democrats like Tom Suozzi are winning, and so is Donald Trump?
Absolutely. And I do think voters are savvy enough to sometimes say, okay, I'm going to vote for Donald Trump, but I'm going to need a check and balance for that. So I'm going to vote for a Democratic congressman and a senator when those seats are up. And so to get that divided government, to get that checks and balances, I think that's what happened in 2016. I think that's what happened in 2020 to a lesser extent, or certainly in the midterms.
Where you had voters leaving the presidential slot blank in states like Georgia, but also voting for Republicans down ballot.
Exactly.
This could take on a lot of different forms, can't
it? Could take a lot of number of different forms, but I do think it is that immigration issue where Donald Trump is making hay in the New York suburbs.
Well, we have a lot to learn still, but an 8-point victory has to have Democrats in general feeling pretty good about it.
They should be feeling pretty good today.
It looked like it was too close to call based on most folks' narratives going
right. Now, if what they do is see what Tom Suozzi did and replicate that,
Right.
then that might work.
That's the playbook, at least until the next special election.
Right, exactly.
I never asked you what's going to happen to George Santos. I guess he just keeps making videos or something. Huh?
Yeah, I guess. Maybe he'll get a reality show.
Right, yes. When does the show start? I'm
Cooking
wondering.
with George Santos. Who knows?
That's, I hadn't thought about that. I feel like I need to see at least one of those. Wendy Benjaminson, inventing new programs before our eyes. Probably not here on Bloomberg, I'm going to guess.
I'm going to guess.
Great to compare notes with you this morning after the election. We want to bring you up to date on world and national news now. For that, we turn to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Ukraine aid may still be unfinished business in Congress, but Defense Secretary Lloyd Austin is telling our allies the U.S. is fully committed to Kyiv.
The Kremlin keeps on betting that we will all lose interest in Ukraine and that our support will flicker and fade. But I am more determined than ever, and I know that you are as well.
Austin spoke virtually to the Ukraine Defense Council contact group today. He had planned to go to Brussels for the meeting, but scrapped the trip after being hospitalized for a bladder problem earlier in the week. Democrats have increased their numbers in the House with a win yesterday in New York's 3rd Congressional District. Tom Suozzi defeated Mazi Pilip. He attributes the Republican loss to former President Trump.
Let's send a message to our friends running the Congress these days. Stop running around for Trump and start running the country.
Suozzi's victory is being seen by some as a possible bellwether of November's presidential and congressional elections. Today marks 6 years since the school shooting at Marjorie Stoneman Douglas High School in Parkland, Florida, that left 17 people dead. And this will be the last anniversary before the building where it happened is demolished. Danielle Gilbert still remembers watching as 4 of her classmates were shot.
That classroom is such a huge part of who I am now. 6 years later, I'm still living my life as best as I can.
Danielle Gilbert says even once the building is torn down this summer, she'll never get over what happened. The Broward County School District is still finalizing plans on what will be built on the site. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks higher now across the board. Dow back in the green, little changed, up by 1 point. The S&P bouncing back from yesterday's sell-off, higher now by 18 points, up by about 0.4%, while the NASDAQ Composite Index is up 88. That is a gain right now of 0.6%. Could not ignore the Russell 2000 Index of small cap shares today. It is surging by 1.5%. Again, to put that in context, S&P by comparison up now by about 0.4%. 10-year 4.25% with a 2-year that's yielding 4.55%. Gold, little change now, down 23 cents the ounce to $19.92, while West Texas Intermediate crude is down 1.3%, $76.88 for a barrel of WTI. America's housing market may be losing momentum again. That story now from Bloomberg's Vinny Del Giudice.
Mortgage rates rose to a 2-month high, weighing on the sending weekly mortgage applications lower. Last week's rate in a 30-year fixed mortgage climbed to 6.87%, the highest since early December. The government is set to weigh in on the housing market Friday with construction data. Vinny Del Giudice, Bloomberg Radio.
And speaking of housing, home builders are trading higher right now. We have got Lennar up 0.7%. KB Home also up 0.7%. Toll Brothers up now by 1.6%. Briefly, Lyft after earnings up by 33%. Balance of Power continues. Back we go to Washington once again. Here's your host, Joe Matthew.
All right, Charlie Pellet, we thank you, as we always keep you up to date on the markets here on Balance of Power, of course, live from Washington with updates every day and analysis on what's happening here in the Capitol. And we look no further this day after New York 3, the special election to fill the seat once held by George Santos. We look no further than the philosopher Anthony Scaramucci for analysis, who tweets, "Swazi's victory is a tell for Biden. Trump is finished," writes the former Trump administration official. He has lost the suburbs. Democrats hope that's true. A lot of questions about whether we can go that far and call this a bellwether, and that's where we begin with our panel. Let's bring them in. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. Great to see you both. Jeannie, you're sitting in New York right now. Is Anthony Scaramucci correct?
You know, I think it may be a bridge too far to say he's lost the suburbs completely, although to your point, Democrats are hoping that he is right. You know, it is fascinating because Long Island historically is the birth of the suburbs in the United States. And unlike many suburbs in 2022, you know, even beginning in 2020, it started to veer to the right and has gone in that direction until it was arrested last night by Tom Suozzi. So a big victory for Tom Suozzi. You know, the interesting thing about Scaramucci and Biden and Haley and even Trump all coming out is that Trump didn't play very big in this campaign. There wasn't a lot of Trump talk, if you can believe it, Joe. It was a lot of immigration, little on abortion and a few other things, not a lot of Trump. So I don't know if he's dead quite yet, but it was a good night for Suozzi.
Well, of course, Trump was lamenting that on Truth Social, writing, "Republicans just don't learn, but maybe she was still a Democrat, ? I have almost a 99% endorsement success rate," he says, in primaries and a very good number in the general elections. That's very debatable. Just watch this very foolish woman, he says, Mazi Pilip, running in a race where she did not endorse me. Would that have helped her, Rick?
You know, I've got a completely different look at this district. And no, I don't think having Donald Trump play big in a district that has one of the highest education rates in America, that's one of the most affluent communities in America, that used to be a good thing for Republicans. Now it's a bad thing. We do well with Trump-like voters, which are people who are high school or less education and are poorer than the national average. So when you look at this district has 39% Democratic registration and 28% Republican registration. That's almost identical to what the outcome was of yesterday's, special election. 100,000 fewer voters showed up last night than the year before, and in 2020, 200,000 more people voted. So this, I wouldn't read much into this other than what it tells you already. This is a Democratic district. We stole it once, and now it's been given back. Highly unlikely we get it again anytime soon.
Wow. Well, look, that's really important, Rick, because I keep hearing that this is a bellwether. You obviously see it different.
No, it's a bellwether if you look at how Democrats can get elected in Democratic districts, right? I mean, like, yes, This is a good way to do that. In a competitive district, no, this is not a bellwether.
Well, it's going to get more Democratic based on what we're hearing about potential redistricting, Jeannie. So this is a Republican blip in a Democrat district. Is Rick right?
You know, the Republicans have done well there. Let's not forget, Chuck Schumer lost this county in the last election, and he won New York. He was reelected, obviously, overwhelmingly. The entire county legislature is Republican. Most of their local elected officials, if not all at this point, are Republicans. So they have been voting Republican. You know, it was one of the very bright spots for Republicans. It's really what gave Republicans the House, is their ability to really move New York to the right. So yes, Rick is right in terms of the numbers of registrants, but this is a district there where the people have been willing to vote. You know, last time around, 0.8 George Santos wins by. So, you know, we have to wait and see what happens. But I think, you know, the other side of this story is Tom Suozzi gives, you know, a really a rule book for other Democrats running in the suburbs, in the fact that he was willing to take on an issue that Republicans said they owned, and that was immigration. This entire campaign was about basically immigration, and a Democrat won on that, and he won on it by not running away from it. He won on it by saying, you know, we want border security. I want border security. Shut down the border. So, you know, he showed that this issue that Republicans keep saying is a winning issue for them, so much so that they thwarted their own bill in Congress the other day, may not be quite as winning an issue for them in 24 as they suspect.
So did we learn something there, Rick? If not a bellwether, was this a bit of a playbook for Democrats in how to deal with the border issue this year?
Yeah, I mean, you can't get worse than what the Democrats have been on for the last 4 years, right? Where they have just denied that there's a problem at the border, refused to admit that it's a crisis, and then welcomed, you know, people to come across the border with an incredibly unpopular immigration policy. That being said, yeah, I mean, part of what Suozzi did is he actually said, let's make a deal. It's not like his border plan was any different than what Republicans have been saying. It's not like he is better at the border than the Republican Party has been. It's that he said he wanted to do something. And I thought Don Levy, you know, the pollster that you just interviewed, said something I thought really important. And that is, he said something about, like, let's just get something done on the border. Right. And with the news about the collapse of the Senate border deal and the fact that people consistently say, regardless of what party you're in, we want people to work together to actually get solutions. That's what Suozzi appealed to, is he was a problem solver. He was a co-chairman when he was in Congress of the problem solvers, you know, group in the House of Representatives. And that's what he talked about every day, is I'm going there to solve problems. And that's what connects with people. They don't expect you to be right on the issue with them, right? They're going to be different on every single voter. But what they do want you to do is commit to actually be productive.
Well, if the refrain is just get something done, Jeannie, it probably just got a lot harder for Mike Johnson. Now he just lost another seat in what was already a razor-thin majority. We've only got a minute left. Is the store closed? Are we heading for a shutdown? What's next?
You know, let's hope not. And, you know, Mike Johnson, he came to Long Island to campaign, was not effective in Long Island. And, you know, we can't afford a shutdown, so we hope that doesn't happen. But this is a Congress under Mike Johnson that has proven itself unable to do anything except symbolic gestures like they did last night with the impeachment.
We're going to have a lot more with Jeannie Shanzano and Rick Davis as we look from the special election in New York to the Senate race in Arizona, where Kari Lake just picked up a pretty important endorsement here in Washington. We'll talk about that with Rick and Jeannie. And a reminder, Congresswoman Abigail Spanberger will be with us coming up in about 10 minutes at the top of our second hour. Also ahead, a special conversation with SEC Chair Gary Gensler. David Weston will bring that to us ahead. We've got a lot left in us here on Balance of Power. This is Bloomberg.
on Bloomberg. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story headline right off the Bloomberg professional service. NatWest is preparing to appoint Paul Thwaite as the permanent CEO. This, according to Sky News. Thwaite has been interim boss. Shares of NatWest, the ADRs, traded here in the U.S. right now. They're up by about 1.9%. A day after a clerical error sent Lyft shares up 67% after hours. Lyft shares are pushing higher today. Right now, they are up by 31.6%. The mistake overshadowed what was otherwise a solid beat on profit and bookings projections, so it signaled a years-long effort to boost ridership and challenge Uber may be paying off. Uber shares today, they're surging as well, up by 11.5%. Uber is buying back as much as $7 billion in shares to return capital to shareholders. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, the buyback announcement comes after Uber reported its first full year of operating profit and consistent positive free cash flow in 2023. Uber's CFO is calling the repurchase plan a vote of confidence in the company's strong financial momentum. Uber is the latest of a handful of tech companies announcing plans to boost returns to shareholders in this way. Earlier this month, Meta Platforms announced plans to buy back as much as an additional $50 billion in shares and issue its first ever quarterly dividend. And Airbnb just yesterday expanded its buyback program by as much as $6 billion. Charlie.
And that's Denise Pellegrini reporting. She mentioned Airbnb after earnings. Airbnb shares down now by 3%. Coming up after the close of trading today, we'll be hearing from Cisco Systems. Cisco right now up 0.7%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Balance of Power with Joe Matthew on Bloomberg Radio.
Could Kari Lake be the next senator from Arizona? We're asking that question seriously now that the election denier has been endorsed by the NRSC, the National Republican Senatorial Committee. That's what you want. The chair, Steve Daines, Republican, Montana, throwing support behind Kari Lake in her effort here to become the next senator. Of course, this is a person who failed in her attempt to win the governorship and has ever since been conducting a fire and brimstone campaign to overturn the results, having insulted John McCain and warmed up to Donald Trump. There are a lot of questions about how this plays in Arizona in what is at least still a three-way race. We get into it with our panel, Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Rick, you know Arizona politics as well as anyone. Are you surprised to see this endorsement, or is this just par for the course now for the NRSC to just go for the Republican frontrunner?
Yeah, I'm not surprised. I mean, she's not only just the Republican frontrunner, but really stands no competition for the nomination. I know the Senate committee was very worried about her carrying baggage in from, claiming she's still, been elected governor of the state, even though she lost, and sort of playing the Trump card. I think they had to make sure that she was actually not going to do this in this election cycle. She's tried publicly to distance herself from the old Kari Lake to create the new Kari Lake, and the NRCC has rewarded that, or NRSC has rewarded that with an endorsement. We'll see. She's had a hard time lately at home. Got booed at the Republican convention because of the argument she got into with the former chairman, forced him to resign. So she's, if you like a very interesting candidate with incredible amounts of baggage, you got one to watch this cycle.
Yeah, boy, that's for sure. Steve Daines, Jeannie, says, Kari Lake, this is a quote, is one of the most talented candidates in the country. And I remember distinctly last year, her at an event calling on McCain Republicans to get the hell out of the room, calling them losers. How does that play in Arizona if you want to be a Republican?
Yeah, it's going to be tough. You know, she has been, and we keep hearing that she has been trying to moderate her image, walk away a bit from her election denials, which were not that long ago, that she impressed people at the NRSC meeting in Florida so much so that they made this move to endorse. You know, I think it's probably that they didn't have many other options, number one. But more importantly, number two, is that she has the support of Donald Trump, and he is really got a strong arm around this party now. I don't see how Steve Daines could have continued in his work with the NRSC if he didn't, you know, go in this direction. So, you know, I think they were left with sort of little options here. And so they're trying to put a sort of a bright smile and a happy face around it. But, you know, she is going to be a tough candidate. It's hard to come back from a loss like she did to Hobbs, and she's going to have to prove herself. And we still don't know the fate of Kristen Sinema, if she's going to be running or not.
Well, that's right. This seat is considered a toss-up for the general right now, Rick. But if Kyrsten Sinema does not run in our remaining minute here, what impact does that have?
You know, it makes it a much more straightforward race, R versus D. The R has a lot of baggage, as I talked about earlier, has never made peace with the McCain people. And I think, you know, you'd have to say trending D.
Trending D in Arizona. Fascinating. Thanks to both of you for being with us this hour. We're going to bring back Rick Davis and Jeannie Shanzano coming up in just about 10 minutes after our conversation with Congresswoman Abigail Spanberger. We're going to talk to the Democrat live from Capitol Hill this day after Alejandro Mayorkas was impeached. And as we understand now, the supplemental emergency funding request for Ukraine, Israel, and Taiwan, DOA in the House, is, of course, a member of the Intelligence Committee, and she'll have a lot more to share on that. Kaylee Lyons is also on the way in next. As we're just getting started, a special conversation ahead as well with Gary Gensler and our own David Weston. All ahead in hour 2, which starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Will Ukraine ever get the money? Welcome to the fastest show in politics, as an emergency funding bill that just passed in the Senate lands with a thud in the House. Only 3 weeks before a possible government shutdown. Kaylee Lyons, the special election in New York just made the math even more difficult for Republicans in the House, and you wonder what Speaker Mike Johnson's next move will be.
Yep, Swazi's coming back to Congress. He is a Democrat. He has flipped the seat once held by Republican Congressman George Santos, and that is one less vote that Mike Johnson will be able to count on if he wants to pass anything in this House, although it does not seem, to your point, Joe, that he is interested in passing the supplemental package that the Senate passed just days ago.
You do a little quick math here. With 3 vacancies, he's down to 2.
Yes.
He can only lose 2 votes.
The tightest of tight margins.
And the government is set to shut down 3 weeks from tomorrow unless something is done here. We've got a lot to talk about. Abigail Spanberger, the Congresswoman from Virginia, will bring the Democrat view live from Capitol Hill for us in just a moment.
Absolutely. I wonder her thoughts on this idea of a discharge petition, that Democrats maybe could gather enough signatures, including from some on the Republican side, to actually pass this, even if Speaker Mike Johnson doesn't want to put it on the floor.
Yeah.
So we have all of that ahead on this Valentine's Day program. Yeah. Happy Valentine's Day.
Happy Valentine's Day.
Charlie Pellet, to you as well. Are the markets feeling the love today?
Certainly are. As of now, emphasis on now. Who knows what's going to happen between now and the close? We have got the S&P 500 index advancing by 19 points, somewhat of a bounce back after yesterday's steep losses. The Dow Jones Industrial Average up 18, little change right now. The S&P, by the way, up by about 0.4%. NASDAQ Composite Index up by 98 8, up 0.6%. Cannot ignore the Russell 2000. It is surging now by 1.6%. Again, context S&P by comparison up by 0.4%. 10-year 4.24%, with a 2-year right now 4.55%. Spot gold up $2.50 the ounce to $19.95, up 0.1%, still below $2,000. And West Texas Intermediate crude right now down 1.3%, 76.84 a barrel. Robinhood shares jumping by 9.5% after the online brokerage firm reported fourth quarter net revenue that did beat estimates. And after the close of trading today, we will be hearing from Cisco Systems. Cisco right now up by about 0.6%. Balance of power continues. Back we go to Washington once again. Here are your hosts, Kaylee Lyons and Joe Matthew.
All right, Charlie Pellet, we thank you. Kaylee, we're picking up the pieces here on a Valentine's Day with love in the air in Washington.
Yeah?
No. Following the impeachment, this is the first time we've seen this in 150 years of a cabinet secretary. This is amazing. They got it by one vote. Now that we've had the special election in New York, that vote could not be duplicated even today. Mm-hmm. So the day after, it would already be impossible to pull this off, reminding us that timing is everything, I guess, in life and politics.
And keeping in mind, this was the second attempt at impeaching Secretary Mayorkas. It failed last week because Steve Scalise was still at home receiving treatment for cancer. He is now back. He was the deciding vote here.
Yes, that's true. He is back. And how quickly things change here. Tom Suozzi comes back to his old seat, back to Democrats. Rick Davis and Jeannie Shanzano telling us that that seat stays in Democrats' hands through the general election, because we're going to do this all over again in a couple of months.
Yeah, less than 9 months away. And on that note, Joe, Rick Davis and Jeannie Shanzano are here with us on Bloomberg Television and Radio. And there is a question here today, Rick, about the implications that this has for Speaker Johnson, who already had great difficulty exercising control over the conference that he is leading. Does one less vote, actually make a difference? Does it change much materially for him?
Yeah, look, we've already seen that the speaker has had some problems doing a whip count, actually knowing how many votes he has when he comes to the floor. You mentioned the Mayorkas impeachment failed the first time. That was a real mistake in the speaker's whip count, or he just decided to march everybody down there and on a kamikaze vote. I don't know which it was, but it didn't spell well for the future. And this just makes it that much harder. And it does give more power to sort of these moderate Republicans who have had to deal with a insurgent, right-wing, minority that has tended to control the speaker's agenda, and maybe it puts them back in a little bit of the driver's seat because these margins are so close. Can't lose any of them, in addition to losing any of the Freedom Caucus people.
Well, Republicans drew a little bit of blood here, Jeannie. Not that anybody expects this to go to trial in the Senate. The expectation is that this will go to die in committee when the 2 articles of impeachment are delivered after President's Day. With that said, though, did this eliminate any hope of getting to another border deal or enacting any form of border legislation for the rest of this session?
Yeah, and Joe, it didn't even take this. That hope was dead long ago. We saw it die a few weeks ago. This is just the nail in the coffin. There was not going to be border security. And it is maddening because, of course, that is what voters are asking for across the board, Republicans and Democrats. And instead of doing that, what they're doing is impeaching a cabinet secretary. There's a reason very few Congresses do this for the last 150 years. And it's because it is an ineffective way to address a real challenge people are facing. And I think if there's one lesson to be learned out of the Suozzi New York 3 race last night, it's the fact that voters really do want Washington to do things. They want Washington to work. They want solutions to problems. And what Tom Suozzi said that was effective with voters, even in this purple district, was I'm going to go to Washington and try to get things done, even an issue that Democrats aren't really known for being, well-versed at, this issue of immigration. He fought the entire election on that, and he won by 8 points. So Republicans have to look long and hard about the fact that they derailed a bill in the interest of Donald Trump, and they have to think that maybe voters don't want you to hurt the United States for short-term political gain. And it's a lesson they're going to have to grapple with.
All right, Jeannie Shanzano and Rick Davis, our Bloomberg Politics contributors, they will be sticking with us for the next few minutes here, because we also have to bring you an important conversation live from Capitol Hill. Joining us now on both Bloomberg Television and radio is Democratic Congresswoman Abigail Spanberger of Virginia, who sits on the House Intelligence Committee and also just returned from a visit to Ukraine where she met with President Vladimir Zelensky. Congresswoman, thank you so much for being with us today as we question now the fate of this supplemental package that would provide $60 billion in aid to Ukraine in the House. Can you tell us first what you saw and heard? What happens if Ukraine does not get this aid?
The provision of this aid through this national security supplemental is of the utmost importance. It is of dire importance to our national security. And on the ground, when we were in Kyiv, what we kept hearing from Ukrainian military officials, from President Zelensky himself, but importantly also from U.S. officials at the U.S. Embassy, is how incredibly vital this aid is to Ukraine's ability to defend itself, to defeat Putin, to regain more of its territory, to protect its citizens, and ultimately to defeat Russian aggression and Vladimir Putin's army.
Well, reality seems to be biting pretty hard here, Congresswoman. I appreciate the message that you're delivering today, but your speaker says this is DOA, that this funding will not even get a vote in the House of Representatives. And the calendar looks pretty challenging right now. Even if this money does get passed, it's going to take a long time. Do we need to be honest with ourselves or honest with Ukraine about what's happening in your House of Representatives?
The reality is that one person, the Speaker of the House, has the ability to bring this bill for a vote. If he were to bring the bill for a vote today, it would pass with an overwhelming majority. This bill would deliver vital support to our Ukrainian allies. It would deliver vital support to our Israeli allies. This bill would deliver vital humanitarian aid to stabilize a region that is currently destabilized. And this bill would support our partners and our allies in Taiwan, because make no mistake, right now, China is watching, Iran is watching, and Vladimir Putin is watching. As the world is questioning, will the United States continue to be a global leader for democracy in support of freedom and American values? Will the United States actually take steps and work in its own, our own best national security interests and pass this bill? And that decision comes down to one man. Is he going to choose the national security priorities of the United States, bring this bill forward? I don't even care if the Speaker votes for it himself. He just needs to bring the bill. Because the reality is, failure to bring this bill is an abdication of our responsibility. It is an absolute capitulation to Vladimir Putin, and it endangers our country. So there's no other option but for us to bring it.
But Congresswoman, theoretically, there is another legislative option that could go around the Speaker, a discharge petition. Are you effectively telling us today that you don't think that stands a real chance of working?
I think all options are on the table, but I think it's tragically sad that we are trying to come up with procedural avenues around the most simple and straightforward manner. We're the House of Representatives. We're supposed to take votes up or down. This bill represents a major priority for our security. And so, yes, I am happy to look at all of the other contingencies we could put in place if we are dealing with the reality that the Speaker of the House doesn't want to protect our country and our national security interests. But the fact that we're actually having to plan for these sorts of contingencies is, in my mind, tragic. I'll continue working with my colleagues to make those plans because we need this bill to pass. But the bottom line is it could pass today if only the Speaker would bring it.
Well, you wonder what's going on here. Some have suggested there's a bit of gaslighting going on at the hand of Donald Trump. That as long as the Speaker's on the phone with Mar-a-Lago, this is never going to happen, Congresswoman.
You know what? That's one step even further. The idea that a former president and now candidate for president, would want to stand in the way of the United States Congress protecting our own national security interests. The United States Congress, House of Representatives, passing a bill that passed with the support of 70 senators, Democrats and Republicans. It is absolutely just ridiculous that Donald Trump would be on the phone with the speaker and encouraging him to do anything other than bringing a bill forward that protects our interests, that protects our values, and that ensures our national security interests are prioritized.
And you mentioned that you think Vladimir Putin, the president of Russia, is watching this very closely. I do have a question pertaining to Russia for you, Congresswoman. Given your seat on the Intel Committee, the chair of that committee, Mike Turner, put out a statement today saying he was asking the president to declassify all information related to a serious national security threat. Congresswoman, we've seen reporting that this is about Russia. Can you confirm that?
I respect you for asking that question, but as a former intelligence officer and current member of the Intelligence Committee, I'm going to, just defer to the statement that the chairman has made and not provide any additional comment on that.
Well, Congresswoman, could you at least tell us if this should concern us? Should we be eminently worried about a threat here wherever it's coming from?
I think we should always be concerned of the threats that are targeting the United States. There will always be foes the world round. We know them economically and militarily: China, Iran, North Korea, Russia. And that is why we must pass this national security supplemental. And particularly at a time when we do see a statement coming out from the chairman of the Intelligence Committee, noting that there are specific threats at this time, that there have been specific briefings about. There's no time like the present for us to actually focus on our national security and push this bill forward.
I realize you don't want to talk about this, Congresswoman. As a former CIA officer, I wonder if you think this is irresponsible for the chairman to put something out like that without telling people what the heck it means.
So it's not an issue of want, it's an issue of what I legally can do, and so I can't disclose any information related to what I've been briefed on. And I am aware that all statements, there's been significant discussion within the intelligence community about what can be made public or not. And so I'll defer to the chairman regarding what he put out, but legally and with my responsibility to protect classified information, will not comment beyond what it is that he put out in his very brief statement.
All right, Congresswoman. Well, certainly we respect that. We appreciate you answering what you can. On a different related matter, Joe was mentioning the legislative calendar, how it may not favor passage of emergency aid. And in part, that's because we're just a few legislative days away from potentially a partial government shutdown. The deadline is March 1st. You're going to be out of session for a few weeks between now and then. Can it be averted? If so, how?
This is another question where, when Speaker Johnson stepped forward and said he wanted to be Speaker, that puts him and his leadership team in charge of the calendar. Certainly, I think it's totally appropriate if Speaker Johnson wants to say, you know what, not only do we have this supplemental, this national security supplemental to do, but we also must fund the government. We also need to do FISA 702 reauthorization. We also need to focus on FAA reauthorization. Let's cancel that district time. Everybody come back to Washington, stay in Washington until we get this done. I would be wholly supportive of a Republican leadership choosing to do that, because you're right, there's limited time and there is much to do. And particularly when we do see, floor time being spent impeaching Secretary Mayorkas, rather than actually putting forth the government funding that will ensure Border Patrol has the dollars they need to actually enforce the current laws, broken or in need of improvement though they may be. The idea that we're spending time on that and not funding vital agencies like Border Patrol, like our military, et cetera, is I think it speaks to the sorts of priorities that are currently being put forward. But the limited calendar, that is of the majority's doing, and it is fixable if they want to keep us here, and I would be wholly supportive of that.
We'll let you get back to your day in just a moment here. We only have a minute left Congresswoman. If Mike Johnson passes a CR to keep the government open, will he be fired?
You know, I can't imagine the reality that, well, I can't predict what my Republican colleagues would do. I would say the fact that we live in a world where a speaker is routinely choosing not to govern because that might lead to his ouster by his right-wing flank, you know, that is everything that is wrong with the United States Congress. I wish that he would say, I'm a speaker of the House. My job is to ensure that governance is occurring. Therefore, I will bring bills for a vote. Vote for them, vote against them. That's the prerogative of each individual member. But to actually keep us from governing because he might lose his job, it's a sad reality, and one I wish that he would push through and not be fearful of.
We're glad you could talk to us today, Congresswoman Abigail Spanberger, live from Capitol Hill, only here on Bloomberg.
from Bloomberg World Headquarters, I'm Charlie Pellet. 121 right now on Wall Street. We're looking at an up market. For now, little change in the Dow Jones Industrial Average. The Dow now higher by 0.5 point. We've got the S&P 500 index climbing by 0.4%. Also little changed on the S&P, up by about 17 points right now. The Nasdaq Composite Index up 0.6%. The Russell 2000, though, by far the outperformer, up now by 1.65%. Again, to put that in context, S&P 500 index right now up by about 0.4%. 10-year 4.24%, with a 2-year that's now yielding 4.55%. Equities snapping back today after a slide yesterday that was triggered by a reset in Fed rate cut expectations. We've got spot gold at $19.93 the ounce, holding below 2,000. Little change there. West Texas Intermediate crude down 1.1%, 77 even for a barrel of WTI. Lyft shares surging now by 31.9% after the ride-sharing company reported fourth quarter results that beat expectations on key metrics. Lyft also gave an outlook that is above analyst consensus. We've got Uber shares, the crosstown San Francisco rival, also advancing, up now by 11.6%. Again, Lyft surging by 31.7%. Recapping, stocks are higher. S&P right now up 18 points. That is a gain of just about 0.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues with Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much. It is Joe and Kaylee here on Bloomberg Television and Radio, indeed, live from Washington. But we want to head now back up to New York, where our very own David Weston, host of Wall Street Week, is joined for a conversation with Gary Gensler, the chair of the SEC. David?
Yeah, Kaylee, somebody you know well, actually. Gary Gensler is the chair of the Securities and Exchange Commission. Thanks so much for being here with us in New York.
No, it's so terrific to be here on Valentine's Day, no
How about
less.
that? Happy Valentine's Day. I hope you're taking care of that.
I hope, well, but you are with that great wife of yours.
Yeah, I did it first thing in the morning.
All
so
right.
let's first talk about the news of the day, this typographical error apparently from Lyft. It's too soon, I assume, for you to know what happened, and you don't talk about any individual cases. But I want to ask a more general question about fat fingers. Is it part of your jurisdiction to make sure that publicly traded companies have certain mechanisms in place to minimize? We can never eliminate mistakes, but to minimize them.
Well, so it's really part of their responsibility. You use the term fat finger. It could be a trading shop that sends a flood of orders to an exchange. In the old days, they called it a fat finger because somebody's finger hit. Now it could be in an algorithm. Or even that your filings, your press releases, and your annual reports are accurate. So that's really up to them. But yes, we have a role at the Securities and Exchange Commission to oversee, to make sure that people don't defraud the public and that they publish accurate financials.
So when something like this happens, you call somebody up and say, are we looking into this to just make sure there wasn't something fishy going on?
I can't speak of individual things, but let me step back. So I'm chair of a 5,000-person agency. A quarter of our agency does enforcement. Another quarter does examination. They don't call me up. I don't call them up on a daily basis, say, look at this. They're really talented, David. They figure out what to... We literally get something like 40 to 50,000 tips, complaints, and referrals a year, and they have to figure out which ones to pursue, which ones not to. And so occasionally I read about things in the press, and I go, oh, I didn't know we were investigating that. That's great. Our Boston office is on that.
Another subject very much in the press, has been for some time now, obviously is Bitcoin, the ETF spot Bitcoin that you approved. And as I understand it, part of the reason you did it, the explanation for it, was you felt that the CMA futures Bitcoin situation would be good enough to indicate if there's any market manipulation going on. Are you far enough into it to know whether that theory holds true, that in fact you can tell from the CME futures trading what might be going on with spot?
So it's a little bit more nuanced than that, but several years ago, back in 2021, there was a product that went live, so to speak. An exchange-traded fund wrapped around these Bitcoin futures at the Chicago Mercantile Exchange. And then a different set of products came to us and asked to list on the stock exchanges. And while we had denied like 24 of these over about 5 years, a court in Washington said, no, they thought we had not gotten that right, and they remanded it back to us. And I thought really the most sustainable thing forward was to approve these given the court ruling. In terms of the statistics, we really do look out to ensure as best we can there's not fraud and manipulation. But one of the challenges on the Bitcoin markets, David, is so much of it's traded on trading platforms that are non-compliant with our laws. Now, Bitcoin's not a security, but they're trading on those platforms a lot of other crypto tokens without prejudging anyone. Have to be careful. That with hundreds of other crypto tokens on there, likely there's other securities. And we are in court in a number of these cases in front of various judges and panels. And so the American public, when you're investing in something like Bitcoin, to be aware, one, it's a highly speculative asset. Number two, it's generally trading on some platform that is not fully compliant with the securities laws for other things they're doing. And number three, I would mention is think about what use case. What is the actual use case? When you buy 100 shares of XYZ stock, you kind of know what's behind that company, what the there is.
You said you're not going to prejudge. I wouldn't expect you to prejudge. So let me ask you to prejudge.
Yeah, David, I figured that.
A big question people are asking is Ethereum. Is there a principal difference, a reasonable difference between Bitcoin and Ethereum? Now, I understand you'll have to have an application to look at all the details and stuff, but just in a general sense, is there a distinction between the two for this purpose?
So you help the American public understand why I'm not going to answer that, because I am just one member of a 5-member commission, but two, there's various applications in front of our commission. And just as you wouldn't want a judge to prejudge, a commissioner shouldn't prejudge. Those applications are in front of us right now.
Okay, let's talk about disclosure of climate issues, which has been pending before the commission. And it has not come out yet. It's not clear why. Can you give us a sense of the timetable on when you may have those regulations?
So let me just step back. So the Securities and Exchange Commission is not a climate regulator. We are not a regulator of climate risk. But we oversee companies raising money in the public, and they disclose their material risk to you, or they're supposed to disclose their material risk out of rules that have been around for decades. And many of those companies are already making significant disclosures. I think something like 90% of the top 1,000 companies in the U.S. by market cap disclose something about climate. Over half do disclose their greenhouse gas emissions. So there we have a role to bring some consistency, some comparability. You can compare and contrast. That's our role. It's a securities market role, not a climate role. You asked about timing.
Timing, yeah.
The great question. We proposed that rule back in March of 2022. We tend to take somewhere in the order of a year and a half to 2 years to adopt rules if we adopt them. Can't prejudge. But I would say here's the one wrinkle to this, my friend. 16,000 public comments we got. 4,400 of them unique, different comments. We not only have to read them, we have to consider them, we have to think about what adjustments we make. That's the biggest docket of comments we've ever received on a rule. So that's part of why it's, we do our work carefully.
Well, I'm curious about behind the scenes, what you take into account. And one thing very specifically, we have an election year this year, you might have noticed. There may be changes in the Congress, in the presidency. There's a Congressional Review Act that says basically if you don't get some of these rules out before something like 6 months before the election, they can be reversed by the next Congress. Do you even take that into account in thinking about the timing of bringing regulations out?
Look, I try not to have this managed by the clock. And everybody says, oh, no, come on. Yeah. No, it's really about getting it right and allowing that staff to work their part, the economists, the lawyers, the policy folks, the 5 commissioners to weigh in. But we're certainly aware, Congress is a really important part of, they ask a lot of questions about every one of our important initiatives, but this climate risk disclosure. But again, we want to get it right and not against the clock.
You also have just brought out a regulation involving hedge funds and trading in U.S. Treasuries. A lot of complaints about it, a lot of gnashing of teeth, if I can call it that, on part of some of the hedge funds. Do you take into account the possibility of challenges in court in putting together regulation? Because you're going to get challenged. Do you shape the regulation, try to minimize the chance of being overturned by the Court of Appeals?
It's going to be a yes, but let me just answer something. What we've done is the U.S. Treasury market is the base of the rest of our capital markets. It's also how, when you talk to Chair Powell, or sometimes you talk to former Secretary Summers about monetary policy, it's how we do our monetary policy. So the Treasury market is so critical. It's how we also maintain our dollar dominance around the globe. So what we've had is a series of 4 or 5 rules around the U.S. Treasury market. Central clearing, and yes, something about the dealers. And by the way, it's mostly about something called principal trading firms, not hedge funds, not hedge funds. But to your question, we live within the law, and we live within how the courts interpret the law. And ultimately, the Supreme Court writes the law of the land, as you know, the great Chief Justice Marshall once wrote 200 years ago. So we do take that into consideration, and where appropriate, we pivot, we moderate, taking into consideration. And it's critical that the American public have confidence in their SEC, but it's also critical that a rule be sustained in court, because then it can actually help investors and issuers for hopefully years to come.
Gary, thank you so much for being with us. Really appreciate it. That's Gary Gensler, Chair of the Securities and Exchange Commission. Back to you, Kaylee and Joe.
David Weston, we thank you. Of course, David, the host of Bloomberg's Wall Street Week, and a fascinating conversation there that we're glad we could bring to our TV and radio audiences worldwide. They covered a lot of ground, Kaylee, and this is your wheelhouse. When it comes to climate rules and timeline, no concern by the chairman about a potential change in administration, with a lot of work left this year.
Yeah, no concern expressed, saying he's operating in the absence of a timeline in mind, though the Congressional Review Act that David asked about is a very real thing. Within a certain amount of legislative days, you could have a future Congress in which there potentially could be an overturning of some of these rules that the SEC as a regulator has proposed. He was right to point out that this is just a proposal. They've received a ton of feedback on it, thousands of comments, because there has been a great deal of pushback specifically on Scope 3 emissions, concern about what it would mean for the supply chain, for even things like small farms to be able to report these kind of disclosures. And it's kind of that level of disclosure that really has received a lot of the pushback. And what we're waiting to see if it ends up in the final rule, if and when we get it. We didn't really get a lot of clues there from the chairman as to when that will come.
He plays it pretty close to the vest, just as a rule. Wouldn't budge on Ether, an Ether ETF. Does that mean we're getting close to a decision?
Potentially. He hasn't actually said whether he thinks it's a security or a commodity, and there are more filings for spot Ether ETFs. We got another one from Franklin Templeton just this week, and that's what a lot of crypto markets are looking ahead to.
They've got a lot to clear through before the end of this year.
He's a busy man.
Yeah, fascinating conversation with Kaylee Lyons. I'm Joe Matthews. Stay with us on the fastest show in politics. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. An update for Wall Street, the Dow, the S&P, NASDAQ 100 index, yes, Russell 2000, all moving higher right now. S&P 500 index looking at a gain of 29 points at 4982, still below 5,000, up right now by 0.6%. Dow Jones Industrial Average pushing higher by 80 points. That is a gain of 0.2%. NASDAQ right now up by 0.85%. The standout, though, Russell 2000 up now by 1.9%. We've got the 10-year yielding 4.25%, with the 2-year right now 4.56%. Gold lower a little change, down 50 cents the ounce right now. Spot gold at $19.92 the ounce, while West Texas Intermediate crude oil is lower by 1.1%, $77.04 for a barrel of WTI. Home rental company Airbnb ended 2023 stronger than analysts had expected, but suggested that demand in the current quarter will not be as robust as the last. Airbnb right now lower by 2.2%. Zillow higher after the online real estate company reported fourth quarter results that beat expectations. Zillow shares now up by 6.6%. Recapping, stocks very much in the green on this Valentine's Day. A lot of love with the S&P up by 27 points, up now by 0.6%. Speaking of love, back we go. Balance of Power continues. Once again, Joe Matthew and Kaylee Lyons.
Right, Charlie, we thank you with news today from the New York Times, Kaylee, that's very concerning about what we're hearing from Ukraine. You've heard of a hypersonic missile that Russia has this technology. Kyiv is claiming that it's been used.
It has evidence, it says.
For the first time. The State Department, the Pentagon trying to confirm this. But this is a government-run Kyiv Scientific Research Institute of Forensic Expertise that we're hearing from here, concluding that a 3M-22 Zircon missile was used in an attack on February 7th that targeted cities across Ukraine. This is a big deal, Kaylee, because these missiles could evade our own Patriot defense missile systems that we're providing Ukraine.
Yeah, that's exactly the concern here, is that hypersonic missiles would be essentially impossible or just extremely difficult to actually shoot down. And as we're having a live conversation about what additional lethal aid the U.S. could be providing Ukraine going forward, is there actually anything we could provide that would help them counter this specific threat?
That's right, because we don't have this technology. And I know that we are working on it, but it's something that we wanted to talk to Kelly Grieco about from the Stimson Center, a senior fellow with the Reimagining U.S. Grand Strategy Program. It's great to see you, Kelly. You're an expert in asymmetrical warfare. You understand the stakes on the ground here in Ukraine. This sounds like a game changer, is it?
Yes, well, first, thank you for having me. I will say that I was skeptical of this reporting that the Russians had actually used what is a true hypersonic cruise missile. Mm-hmm. But I'm a little taken aback that the United Kingdom's intelligence put out a statement today, essentially confirming that they believe this was, in fact, a true hypersonic missile that the Russians used.
And if that's the case, how do you counter that if this is going to be a live potential force being used against Ukraine in this ongoing conflict?
Well, I think the good news is that these are going to be very expensive weapons. So if this is really indeed the case that it was used, I don't think Russia will have large stockpiles of these weapons. And they're choosing a very expensive way, frankly, to go about destroying Ukrainian infrastructure by using these kinds of weapons. It will be extremely difficult for the Ukrainians to defend against this, because this kind of weapon moves so quickly. And because it moves so quickly, it means that Ukrainian air defenders have very little time to identify this and intercept it.
Kelly, we've spent a bit of time talking about F-16s and whether they could help Ukraine close the skies, as President Zelensky likes to say. You've had contrarian views on this. I wonder if there are any other means to help Ukraine close the skies, considering a new threat like this.
No, I mean, I think in terms of this specific weapon, this hypersonic weapon, I think it will be very difficult, given existing systems, to be able to defend that. And it's not as though we're keeping something back stateside from the Ukrainians in that regard. It's just, this doesn't really exist. I do think, though, there's a broader question here. Instead of focusing just on this particular missile, which is that I'm quite concerned about Ukraine's air defenses at this point. We're seeing regularly that they're intercepting missiles and drones, and I am concerned about what the stockpiles on their air defense systems look like at this point, particularly given we're no longer sending more missiles and other countries have limited supplies.
So as we have Congress now grappling with the question, specifically the House, as to whether or not they are going to provide any more aid to Ukraine, it is now in the hands of Speaker Johnson and the Republican majority in large part. How soon do you think Ukraine is at risk of full depletion of the ammunition of the lethal aid the U.S. was providing?
Yes, I mean, this is a closely guarded secret in terms of exactly what they have left in terms of their stockpiles of air defenses and ammunition. I think the ammunition story is a little bit easier to tell because we can, based on reports with soldiers on the ground, are talking about how much they're rationing their ammunition. I think one thing I just say is that my colleague Emma Ashford and I recently wrote an article in Foreign Affairs talking about Ukraine's need to really adopt a defensive strategy. And I think as we're thinking about supplementals and if we are potentially going to, continue some kind of funding, I think we need to be really targeted in kinds of systems we're providing to Ukraine. And so I would really focus this on air defense. I would focus it on artillery, and I would focus it on defensive works, fortifications, concrete fortifications that make it very difficult for Russia to try to take more territory.
We've heard the extent to which, and this is from intelligence in Estonia, the extent to which Russia is lapping Ukraine when it comes to munitions, specifically old-fashioned shells, the stuff that we just can't make fast enough, never mind get money to produce for Ukraine. We started our conversation talking about hypersonic missiles. How about the most old-fashioned mortar rounds that Ukraine needs, Kelly?
You're absolutely right. This is actually the most important thing, are these old-fashioned, not as expensive compared to hypersonics, but this is an artillery war, very much an artillery war. And I think this is the lack of artillery right now for Ukraine, and also its lack of manpower. We're seeing a lot of reports, I think, that are very concerning coming out of Ukraine, but it not being able to get the recruits it needs to man its front lines, and debates they're having about recruiting, having another call-up. And so it's partly about getting them more ammunition, but Ukraine actually is also having some real difficulties, I think, internally about the future direction of the war. And I do think this is a place, again, where we do have some leverage, particularly if we decide to provide more aid, that we should be making it clear that we would like this to be about doubling down on a defensive military strategy.
Well, of course, Kelly, in this supplemental aid package, it's not just about providing aid for Ukraine, but providing aid for Israel as well. And there's an ongoing conflict, as we know, between Israel and Hamas. We actually just were getting headlines out from Prime Minister Bibi Netanyahu, who said Israel will fight until victory, including in Rafah, that they will operate in Rafah after civilians are allowed to leave. As we are now moving to the to new stages of this conflict between Israel and Hamas, what is it that Israel needs from the United States in terms of aid?
Yeah, so, I think in terms of Israel, it's probably more going to be about munitions, replace munitions. Some artillery, because they are using a considerable amount, but my guess is it's probably more high-end missiles because they're conducting a lot of strikes. So I think they're looking for more of those kinds of systems. There's not necessarily competition as much between what Israel needs and what Ukraine needs in terms of these supplementals. So I guess that's the one piece of good news for the U.S. industrial base.
Boy, well, I guess we could use that. In the meantime, what is in store for Ukraine? We only have a minute left, Kelly, in the next month. When will we know if this was real?
Yeah, I mean, I think what we need is for U.S. intelligence to come out and confirm it. And I'd like to see that and more information about this particular, how they confirmed it. What evidence was used to confirm that this was actually truly a hypersonic missile.
All right, Kelly Grieco, thank you so much, as always, for joining us. We really appreciate your time. Kelly Grieco joining us from the Stimson Center. She's a senior fellow there with the Reimagining of U.S. Grand Strategy program. And interesting to contrast the conversations we're having about the military reality on the ground in Ukraine versus the reality on the ground in Capitol Hill, and a reluctance to get this across the line.
Yeah, they're two different worlds. right now. But we're getting used to that scenario here in Washington, Kaylee. We'll have a lot more straight ahead on Bloomberg.
Listening to Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Thanks for being with us live from Washington in a year of elections, not just here in the United States, Kaylee, but all over the world. Agriculture is spreading as a battleground and something that politicians, who of course have been known to lever what they can here, are taking advantage of this. It's not just ethanol in Iowa.
No, although it definitely is something we're seeing here in the U.S. Donald Trump, the Republican frontrunner, as in 2016, has talked a lot about the American farmer kind of seizing on the movement we are seeing. But as our very own Oliver Crook points out, this is something happening globally, including in Europe.
That's right. We have a special piece for you here, a great piece of reporting from our Big Take story this week. Here's Oliver Crook with more.
The farmers have had it. They've taken to the streets across Europe, protesting cuts to tax breaks, competition from cheaper imports, onerous environmental regulations, and sprawling bureaucracy. The spark came from Germany, where the government rolled back agricultural diesel subsidies. If that sounds familiar, that's because in 2018, it was a seemingly innocuous fuel tax that unleashed the Gilets jaunes across France. France is the biggest agricultural producer in Europe, worth about 100 billion euros every year, but still imports about 50% of its fruits and vegetables. In Germany, agriculture employs less than 1 million people, but it accounts for more than half of the nation's land use. Across the board, though, in GDP terms, agriculture is minuscule. But in very real terms, what is more important than feeding your population? Plus, issues from climate change to the war in Ukraine have highlighted the importance of local food security. In Germany, a partial backtrack by the government wasn't enough. Nor in France. Even the EU has had to flinch. What makes it even harder for politicians is the overwhelming support for farmers by the broader population. Agriculture benefits from huge subsidies. About a third of the whole EU budget goes to farmers, to the tune of about 55 billion euros in 2021. Plus, German farmers enjoyed record-breaking revenue last year. But when you speak to them, it's not just about money. There's also an impression that lofty climate and trade goals are being issued by lawmakers far from the soil that grows the food that sustains them, and an impression which anti-establishment politicians hope to harvest in a year rich with elections.
It's a great piece of reporting, and it's a story that we connect the dots on. Again, Kaylee, back to here in the U.S., where Donald Trump is king when it comes to agriculture. He has the support of farmers across the country, despite his history of tariffs, which is something that we've had a hard time rationalizing.
Absolutely. When we think about soybeans coming from American farmers and how that all factors into the trade war, that very well could potentially be intensified under a second Trump administration.
Absolutely.
If you take him at his word, talking about things like 60% tariffs on all Chinese exports or imports, rather, kind of makes you wonder what the Chinese might do in return, how that could affect agricultural goods coming from the U.S., trying to find buyers in places like China. But just really interesting as we think about kind of the wave of populism as well, how Trump is trying to capture it here in the U.S., but how we see echoes of it in so many other parts of the world.
Just look at the results in Iowa. He's doing a pretty good job with it as of now. And by the way, don't make me talk about the farm bill. We're going to have to get to it at some point this year as they kick the can repeatedly on this. That's not just farming, by the way. That's food stamps. And yet another issue that has yet to really be addressed here in Washington. We're stacking these up now. It's not just funding the government. It's renewing FISA, it's the FAA, it's the Farm Bill. All of this at some point is going to have to be tackled as Republicans lose yet another seat.
Well, theoretically, unless there's kicking of the cans, cans plural, down and down and down the road we go until potentially we have a new Congress. I mean, who knows when these things ultimately could get resolved on a more permanent basis than they have been to this point, as it's just extensions that we are seeing now. But to your point, going to be very hard to get things across the finish line. It was already difficult, and it has gotten one vote more difficult for Speaker Johnson now that Tom Suozzi's coming back to Congress as a Democrat.
Yeah, I guess they're shoveling out. I saw some pretty pictures from New York.
They looked nice.
A snowy Valentine's Day, the backdrop for today's Bloomberg Business Week with Carol Masser and Tim Stenovic. They're in New York right now, ready to carry the baton. Yeah, how does it feel, guys?
The snow's gone.
It's gone.
The snow's gone.
You know, we didn't have the day after, where it gets just kind of gray and mushy and you're just kind of like after the snow. It's actually beautiful today.
I thought they might have a white Valentine's Day. Forget a white Christmas, just any holiday with snow, but I guess you don't get that either.
Something kind of romantic about that.
We're still working on that Super Bowl Monday holiday, which I think when I put out on the Twitter poll, people voted in favor of.
You think so?
No, wait, actually it was...
I'd vote for that.
No, it was Saturday. Move the game to Saturday. That's what the majority wanted.
Will never happen.
Yeah, that'll never happen, right? Because you need the Sunday ratings for that.
I suppose.
We just need the Monday off.
Just make it.
We just need all Mondays off.
Can
we talk to everybody about that?
I would also sign that petition for sure.
We can work on legislation down here for you guys. Is love in the air in New York? Because we're loving each other down here in Washington.
It is, but we're also talking about some pretty serious stuff. Like we're talking about the Fed could be thinking, a rate hike. At some point.
Don't get serious on us, Stenovic.
People are talking about that, guys, after what we saw yesterday. So.
It's Valentine's Day. Did you buy the chocolate?
Way to take the romance out of the
room.
No,
but
I'm just sticking to business. It's a valid line of conversation. We actually asked Jared Bernstein of the White House Council of Economic Advisors yesterday, Joe. You said, how can we rule out that more tightening might be needed? He doesn't like to talk about Fed policy, though. As a rule, those from the White House don't really like to do that. Donald Trump was kind of an exception.
Kaylee, message Jay Powell on the phone. You can't rule out anything. Right? They're data dependent. We know that.
So they say.
For sure. All right, keep bringing us the love, you guys. We're listening, as always, on one of the best conversations in America. That's Bloomberg Business Week every day on Bloomberg Radio and TV. I get to see these guys in person next week. I'll be in New York for a couple of days.
How lucky you are. Bring them Valentine's when you go.
That's right. We're going to go find the chocolate fountain now, and I'll meet you, Kaylee, back here at 5 o'clock.
Perfect. Sounds good. Balance of Power will come up at 5, but Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Radio and television, on YouTube, on Bloomberg Originals. This is Bloomberg Business Week on this Valentine's Day, February 14th, 2024. Carol Masser along with Tim Stenivek. And, you know, Tim, let's get to the setup this hour because maybe the world just isn't really falling apart, at least on the investing side.
Yeah, I mean, okay, we did get one stronger than expected CPI report. The labor report did come in much hotter than expected. But rest assured, the investment world, more inflation prints and other eco data is coming before the next Fed decision. Both stocks and bonds are higher today.
All right, so we're going to talk about the trade. Ahead this hour, we are hearing talk, dare we say, we just talked about it with Joe and Kaylee, that could the Fed possibly raise rates again?
I can't believe we're talking about this.
Although we've had a bunch of guests on who said, yeah, this could happen, guys, so don't rule it out.
Okay, plus, talk about the clerical error heard around Wall Street. A wild aftermarket stock move, a wild ride today as Lyft shares soar up more than 30% right now. We're going to hear from the CEO.
My bad.
Yeah, hey, you got to own up to it, right?
Yeah, I do appreciate that. We're also going to get into investors appreciating. Speaking of appreciation, Uber's first buyback ever. That stock is on the move. We're also going to tell you about the massive office tower losses and the risks they are revealing across the globe. It's a global issue. It's among our most read. It's also a Bloomberg Big Take today, so we'll bring it to you shortly.
Okay, it's only the middle of February, Valentine's Day, but we already know what has fueled nearly all the wealth gained by the world's richest this year, and we're going to tell you about that a little later in the program.
Drum roll, please. All right, first up, drum roll also for Charlie Pellet with a check on the trade today and your top business stories. Hey, Charlie.
Thank you very much. Happy Valentine's Day to you both. We are in the green right now. Do want to begin with a developing story headline right now off of the Bloomberg Professional Service. Job cuts at Morgan Stanley. Morgan Stanley to be cutting several hundred jobs in wealth management. This, according to the Wall Street Journal. Stocks are higher with the S&P up 23 right now, higher by 0.5%. We've got the Dow Jones Industrial Average up now by 31. That is a gain of 0.1%. NASDAQ, the composite index, up 112, up now by about 0.7%. Cannot ignore the Russell 2000 today. Certainly the outperformer by far, up 1.9%. To put that in context, we've got the S&P by comparison up now by about 0.5%. 10-year yield 4.25% right now, with a 2-year that's yielding 4.56%. Gold down $1.73 the ounce to $19.91, a drop there of 0.1%. West Texas Intermediate crude oil down 1%, $77.06 a barrel, while Bitcoin surging 3.8% above 51,000 now, 51,466. You guys talked about Lyft. It is surging after the ride-sharing company reported fourth quarter results that did beat expectations. Lyft shares up now by 30.1%. Uber, meanwhile, also rallying. It's going to buy back as much as $7 billion in shares. Uber right now up by 11.8%. So again, recapping, S&P up 22, higher by 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we've had a few guests, as we've talked about on air, bringing the possibility of this up. It's definitely caught our attention. Dare we say it, another rate increase by the Federal Reserve. I guess anything could happen, Tim.
Yeah, don't take anything off the table at this point, right? They're data dependent. Many might say if any recent history has taught us, you can't rule anything out. Writing about how the market is now pricing in the chance of a rate increase by year end is Bloomberg Intelligence Chief U.S. interest rate strategist Ira Jersey, who joins us from Princeton, New Jersey at Bloomberg Intelligence headquarters. So, Ira, what exactly are we seeing when it comes to trader bets on one possible Fed increase this year? Tell us what you're finding.
Yeah, so there's the market's all over the place. So the market had priced out any chance of an interest rate increase starting last November, and just after yesterday's higher than expected CPI data, the market started to price for a small probability, but still the chance that the Federal Reserve is going to hike by the end of the year. Not a lot, just 125 basis point interest rate increase, but that's still greater than zero, and we haven't seen that for the last couple of months, and that's the reason you've seen a lot of this volatility. You saw the pretty big sell-off in 2-year notes yesterday, and that's the reason that we're kind of recalibrating what the risk is of what the Fed's going to do next is going on. So basically, the dispersion in potential outcomes has actually gotten much wider.
Interesting, right? And quite a shift, Ira?
I'm sorry, say that again, Carol?
I said interesting, but quite a shift if you think of kind of where we were at the end of last year and everybody was banking on such an aggressive cycle in terms of rate cuts. And here we are, it's only mid-February.
Yeah, that's absolutely correct, right? We were at one point pricing for more than 150 basis points of interest rate cuts, and now we're priced for less than 100, right? So we're right around 100 as of when I got up from my desk a few minutes ago. so we're talking about a market that is was very dovish, and it was thinking that the Federal Reserve was going to have to be very easy because there were a lot of forecasts that inflation was going to fall out of bed, that we were going to start to have job losses starting about now, and very weak economic growth, but a lot of the incoming data that we've seen from December and now some of the January numbers are certainly suggesting that if we do have an economic slowdown, that it's farther away than we originally thought, and that's why the market is saying, hey, this year we might not get it. Now, keep in mind though, we haven't really changed the terminal rate that much, so we haven't really changed very much where the Fed is going in say the next 2 years. It's just that it's not starting as early as we had thought, and I think that that's something we have to keep in mind when we're thinking about trading treasuries and if it's a good time to buy or not at this point.
Well, I love that you went there because I was also kind of laughing how you said, well, wait, from the last time I got up from my chair and checked the markets, to here, like the volatility that we've seen this year is pretty impressive. Having said that, the trade that we get on this February 14th, 2024 could be perhaps different from what we get in a week or two, depending on some of the data points.
Yeah, and the retail sales numbers tomorrow have the chance to actually change that. So look, we have the three biggest data prints that move the Treasury market every single month is non-farm payrolls, CPI, and retail sales. Last year, retail sales was actually number 2. That shifted the last couple of months as people really focused on whether or not CPI and inflation was going to start to continue to fall significantly. But nonetheless, tomorrow's retail sales numbers kind of fits the trifecta of, are we going to have 3 good economic numbers in a row? And keep in mind, when you look at the data surprises, the data has been surprising on the upside in things like the hard data. So the payrolls, the things you can measure, the payrolls data, the CPI data, and retail sales, whereas some of the survey measures have not been. So you saw the small business survey by NFIB yesterday came out lower than expected. You have the, some of the ISM data is below 50, saying that we should be in contraction, right? But meanwhile, the hard data is good, right? So I think that's one of the disconnects that I think a lot of forecasters are having right now, is this disconnect between what people are saying and what people are doing. And it's what people are doing is what the market, at least right now, is very focused on.
Ira, the yield yesterday topping 4.3% for the 10-year. I'm wondering if you're thinking now we could be going back to the possibility of hitting 5% again this cycle.
It's not impossible. Certainly, if the inflation data continues to come in a bit hotter than we expect it, we do expect it to go down, just very more slowly than the consensus. But if the inflation data kind of stays where it is or goes up a little bit, it's completely possible we could see 10-year yields up to 5% and maybe the whole curve being at 5%. Because look, the realistic case and kind of bear case for the treasuries right now is that the Federal Reserve is on hold for the next year or two. It's yes, we're pricing for some small chance of a rate hike, and there are some people who exactly how long longer is. My view is that the Federal Reserve will probably cut interest rates 3 times this year, starting in May or June, and then 2 times before the year end. We have to start thinking maybe not as much about what's going on this year, but where the economy and where interest rates are going to be next year. And that's going to be something as we get toward that first cut, and once the Federal Reserve makes that first cut, we're going to see how does the market react to that, and then and what will the Fed path be given the incoming economic data. And we think the Fed's going to cut, but it's going to be much slower than the market's currently pricing.
The only thing I would remind everybody, Bloomberg Markets, the magazine, the cover, the issue is all about kind of the mistakes that were made over the last 2 years in trying to read things. Do you feel like, just real quickly, 20 seconds here, Ira, you have more clarity about what's coming versus maybe what we dealt with the last 2 years?
I think less, and that's one of the reasons why you're seeing all this volatility in the rates market. You get one good number, rates go up. You get one bad number, rates go down.
All right, Ira, so appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence. We're going to talk about the Bloomberg market story in the next hour. Right now, though, we want to get to, from the Treasury trade, what the rates market expects, to what's going on in the equity market, because it does feel like another day, and maybe things aren't so bad. With us is Bloomberg News Markets reporter Abigail Doolittle. She's here in our Bloomberg studio. So it seems like everything's not so bad.
We have a little bit of a rebound today. To use Alex Steele's favorite phrase, we have a dead cat bounce, potentially. We don't know. I personally don't like that phrase because I have a beloved cat. But the idea there
I find cat owners don't like the phrase.
Yeah, and especially mine. She's 20 years old. She's my little baby.
Yeah.
But
Dead dog bounce, don't even go there.
Okay, yeah. Well, yes. Okay, so maybe like dead lizard bounce?
Yeah,
sure,
maybe,
fine.
maybe.
But if we were to take a look at yesterday's trade, it was a gap down. So it means there's a big space between where we started and where we ended on the day. The sellers and the buyers, everybody participating yesterday, just taken totally off sides by that not such a big miss on the part of CPI, but it was just the fact that it didn't go back below 4% as expected. And that was, those liquidity concerns, valuation concerns. So right now we have stocks basically wavering. We have the S&P 500 up about 0.3%. It had been up more than 0.5% earlier. You have the Dow Jones Industrials, which I know we're not supposed to really mention, but that's actually down slightly. The Russell 2000 getting a little bit of a bid, up 1.7%. This after falling yesterday 4%. Its worst day going all the way back to July of 2022. What I would say today with the VIX retreating, investors just don't know. This is tepid trade. It's not robust. The volumes are below what they had been. On the other hand, it is encouraging the idea that we didn't see follow through on yesterday's selling.
Okay, so that could be encouraging, but are there any technicals that you're seeing that could be not so encouraging for continued moves higher?
Well, yesterday we did see the Russell 2000 go below that 50-day moving average. So
it's rallying today.
It's rallying today, and it is back above the 50-day moving average. But when you see an index go back and forth above like a particular level of support, it typically suggests that investors really just don't know that they that uncertainty, that it's animal spirits, it's FOMO, it's fear, as opposed to fundamental investing. Relative to the S&P 500, there's that gap down that I was mentioning. Typically, it looks more like a breakaway gap as opposed to the kind of gap that's going to be filled. We'll only know with time, really.
So breakaway gap meaning?
That we would keep going lower.
Okay.
So it's basically everybody was so stunned yesterday with such a big gap. They were taken so off sides that will continue into the future.
What's volume today?
Volume is, I actually have not checked, but I'm looking at it right now. It's relatively light. Actually, I did mention it's a below volume for below average for the S&P 500, below that 20-day average.
If we stay below 5,000 after just hitting it and going through it, is that significant?
I don't think so. I mean, that's just a psychological marker. From a resistance, from a technical perspective, there is some significance there. It's not exactly 5,000, but above 5,000. If we don't take out that high in any period of time, and there is actually some real support and resistance right on 5,000. It's not super strong. It's creates a little bit of a ceiling. So if we go back above that, the exact low of that gap, that's the more important level, which is 50.1683.
Okay, keep our eyes on that. What about just this being sort of a healthy pullback? Because, Abigail, we're up 20% since those October lows.
Yes.
Can't go up forever.
No, it can't go up forever, and that's a great point. Consolidation is healthy. It's a better way of building support. Something that I would point out, though, on the Russell 2000, which is really interesting, on yesterday's weakness, the Russell 2000 keeps testing the Powell, if you want to call it pivot rally back in December. It still has not gone back to the levels prior to that rally, but it has tested, that's a breakaway gap to the upside that has held sort of for the most part. It's actually been filled. But yesterday's trade tested that, which suggests to me that investors really are having a hard time around the Fed.
I find it interesting when we were talking, and maybe if I look at the Russell, as you say, kind of very volatile in terms of the back and forth. But I do wonder if the expectation is that the Fed might even have to raise rates. That also speaks to the strength, the underlying growth strength in the economy. Like, that's the other flip side of this equation.
Well, that's really interesting because I think yesterday we were talking about the idea that everybody was talking about recently. The idea of no landing came into the conversation or soft landing. And I think now maybe the no landing is out and the soft landing or even a rougher landing could be back into the picture. I mean, earnings is not great. If you take out the Magnificent Seven, we're looking at an earnings recession of 2.5%, which is off of the lows. But nonetheless, it's really those big tech names that are driving some of the growth. And that growth's not even that great either.
Okay, so that's a perfect segue because I know you look at Apple to tell a bigger story. Apple down 1.2% right now, Abigail. There's not really any single story that's driving shares lower right now, but talk to us a little bit about why we should be paying attention to how Apple moves.
Well, thank you so much, Tim, because I was not looking at Apple. So now, of course, I'm starting with the chart. So Apple is once again going back down to its 200-day moving average, hugging it. The more you see a security, and I would say a security more so than a market, test a level of support, they say the first time you sell it, the second time you want to buy it, and then after that you basically just want to ignore it. So Apple, this chart actually looks really pretty bearish. It looks as though it's in a topping pattern, a significant topping pattern. Actually, thank you so much, Tim, because I had not looked at this chart in a little while. And so that's,
I love throwing stuff at you that you haven't looked at, but to be fair, you're the one who brought that to my attention first over the last couple of years. Like, you're watching Apple.
Well, Apple is my number one chart that I would look at and for some reason I just completely forgot about it yesterday. But into its earnings, it was down on the year. It's one of the few stocks that is actually down on the year, and that growth was not great. If I remember, for the bottom line or the top line,
and there were a lot of China concerns too.
Yeah, China concerns and growth concerns in terms of is the iPhone, is it too, so earnings fell, the sales fell by about 3% the September quarter, and then down about 1% in the December quarter, but earnings were down 42%. So, if that's the world's biggest company or one of the biggest company, depending on this market cap race we have going, and that is a concern. But those technicals are really an advanced way of looking at all of the buyers and the sellers, and they're telling you that more people are bearish in Apple.
Quick look into your crystal ball.
Yes.
Ira breaking down the 3 data points that the Treasury market gets moved by the most. Non-farm CPI, retail sales, there tomorrow. If we get another strong report and we see interest rate expectations kind of even move up higher in terms of what the Fed might do, meaning higher for longer. 30 seconds here, implications for the equity side of things. Is that good or bad?
It would be bad because it would be confirmation that this economy is a little bit hotter than expected and that the Fed's really going to have to stay in place. And I would expect that breakaway gap would continue, that we would see a lower low from yesterday. So everybody would basically become more bearish.
Even though the balance of they're higher for longer because there's growth. Or
Or
consumers are shopping,
It
right?
would be good news is bad news.
All right, good stuff. Abigail, deep dive into the equity side of things. A little bit of a mixed trade right now as we speak. Abigail Doolittle, markets reporter at Bloomberg News in our studio. We are going to get to one stock that is outperforming in a big way. Great story behind it. We're talking Lyft in just a moment right here on Bloomberg Business Week.
From Bloomberg World Headquarters, I'm Charlie Pellet. 2:21 the time right now on Wall Street. We do check markets for you all day long here at Bloomberg. Green on the screen, the Dow, the S&P, NASDAQ 100 index, Russell 2000, all pushing higher right now. We've got the S&P up 0.4%, up 21 points, 49.74. Dow Industrials up 20. That is a gain of just about 0.1%. NASDAQ up 99, up 0.6%. The Russell 2000 up now by 2%. To put that in context, again, we do have the S&P 500 index up by 0.4%. 10-year, 4.25%. The 2-year, 4.56%. Gold down $1.80 the ounce to $19.91. Drop there of just about 0.1%. While West Texas Intermediate crude oil down 1.3%. $76.87 for a barrel of WTI. Briefly, Bitcoin up 3.5% right now with a 51,000 handle, 51,298 right now on Bitcoin. Coming up after the close of trading, Cisco Systems will report, and its latest quarterly numbers will give investors a sense of how the company is coping with a sales slowdown and whether it is making cutbacks to stay lean. Cisco ahead of earnings up now by 0.7%. Again, recapping, S&P up 22, up by about 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this is what we like to call kind of a whoa moment. Happened first in the aftermarket last night. Still going on, Tim, safe to say, in today's trade.
Yeah, we're talking about Lyft. The stock jumped, Carol, 67% in after-hours trading after saying margins initially were set to expand this year by an eye-watering 500 basis points. Well, it turns out Lyft did have a strong earnings report, just not that strong when it came to its forecast on margins.
Well, look, first of all, it's on me. There are a lot of eyes on this press release, but at the end of the day, my bad. But look, I don't want it to take anything away from the butt-kicking performance that the business did, thanks to all of our employees and thanks to millions of drivers. I mean, look, we had our financially strongest quarter we've ever had, and I'm super excited about it.
With the clerical error heard around the gig economy and in financial markets, let's get to Bloomberg Technology co-host Ed Ludlow in our San Francisco bureau. Ed, first of all, props for him saying, it's on me. My bad. Got it. Love it. And far be it from us, because we all make mistakes occasionally.
You have never made a mistake, Carol, so you don't know what it's like. Okay?
I've made many, many, many. But this is important. How many eyes saw that release before it went out? I mean, how the heck does this kind of happen? And I don't know, how are you thinking about it? You know, here we are the morning or afternoon after.
I mean, like, I put it straight to David Risher, and he gave me a straight answer. And you know, for our global audience, it's worth noting that David's held in high regard. He's a thoroughly nice guy. And, you know, he fronted up and answered our questions. But it's simply human error. You know, and what we went on to ask him, frankly, is, well, what about the CFO, Erin Brewer? Is her job safe? Is the finance team's job safe? Because this had a real market impact. But it's as simple as the press release and the shareholder debt goes out with 500 basis points. On the analyst call, the CFO reads her prepared remarks and says 50 basis points. And the analyst asks a question and says, hold on, you said 50, but the release said 500, and they admitted it was a mistake, and it's as simple as that.
Hey, you know, it's interesting. SEC Chair Gary Gensler was on Bloomberg TV a little earlier, Ed, with David West, and he declined to comment on Lyft's clerical error, but he did say, quote, public companies are responsible for accuracy of filings. So
yes,
they're responsible.
They are, and look, what Lyft will be doing, what David Risher told us they're doing, what they are definitely doing, is the finance and internal audit team will have to reflect on what happened. You know, as part of this exercise, Bloomberg interviewed a number of securities experts, and I think that the general consensus is they moved quickly to correct their mistake. Clearly, if this move had been to the downside, I think we'd probably be having a bit of a more severe conversation. But as it happens, this for me is the wild part of this story. Yes, the stock spiked 67% in after hours, but when they corrected their mistake, it held gains at 17%. In today's session, it has traded above 30% for most of the day, which puts Lyft on track for its biggest jump ever. I don't think the market is lingering on this clerical mistake. I think they're looking at the earnings gone and the forecast and saying, actually, Lyft did pretty well.
Agreed. I totally agree. Because I think when I came in this morning and when it started trading, I thought, oh, it's going to be, up maybe a little bit, or maybe it'll be even down. Who knows? But to see it up still about 31, 32% as we are speaking, it's pretty impressive. So let's talk about Lyft's business. Living up to the expectations of what investors wanted, and then some in many ways. Talk to us about the business.
Yeah, I think that at a minimum, that's fair. And I'm so glad to be on the show with you guys, because we had a great conversation earlier this week about the gig economy. And what I was writing about in the Tech Daily was that we were worried about Lyft because it doesn't have as wide or diverse a business as Uber. There's no food component. And Uber seems to be doing really, really well. So you can look at it one of two ways. Would Lyft go through the same positive, experience the same trends that Uber did, or is Uber going to continue taking market share from Lyft? But Lyft stood up on its own 2 feet. There is evidence that ridership was strong and that demand based on their gross bookings outlook is good. But we also talked about this idea of the take rate, which is the amount of money that a company makes per transaction on their platform. And David Risher, since he's come in, has made Lyft a bit of a mean, not green, but pink machine. And they are starting now to get positive signs around free cash flow. These are boring company things, but it's important.
Isn't there an issue if the take rate ends up being too big, then you're not going to attract drivers to the same extent that a competing company would, or a competing service? I mean, these drivers they're free agents. They can go anywhere.
Yeah, and earlier in the week, I said to you guys, let's look at the driver supply numbers. So for Uber, that was up 35%, not to the same extent for Lyft, but they're seeing driver supply increase. Where are those drivers coming from? Well, there is some evidence, actually, based on a conversation I had with David, that they might be people that lost their job but found work in the gig economy quickly. But you're on the take rate. A part of it as well is also the removal of the heavy incentives that Lyft had. Lyft was only able to be competitive with Uber by basically saying, we'll cut prices, we'll offer promos, we'll give you a gift voucher, we'll give you a credit if you use a particular airline. When you scale back on those things, you get a better sense for how you can make money in that marketplace. And I think Lyft shows some evidence of that.
I feel like, too, and I want to kind of maybe roll Uber into this, and there's some more specific stuff that we want to talk about with Uber and their stock buyback, but it feels like Lyft Uber kind of growing up, like coming off the pandemic, right, and how that impacted them. But is that the case? Like, walk us through in terms of, I like what you said about what's going on at Lyft, that the CEO, leaner, meaner machine here. It does sound like, to some extent, they're growing up a little bit.
Yeah, I mean, I was a bit unkind about Lyft saying earlier in the week and today that they don't have a very diverse business. They do offer other mobility things, and Tim made the point on bikes, right? And David Risher himself used a Lyft bike to get to the bureau today for that interview. And they're proving that is working, but the definitive story right now, and maybe one reason why the stock is up so much, is that there is evidence that ride-hailing or ride-sharing is not just a fad. It is a stable market in the wake of the pandemic. And Uber spoke to the corporate side of that story. Lyft is basically resonating with a particular age group, demographic, cities like San Francisco.
But Ed, you bring up a really good point that we talked a lot about before the pandemic. I remember speaking to people 2018, 2019, as these companies were hitting the public markets for the first time. And they would say things like, people who are millennials and Gen Z, they're not going to own cars because they're going to be able to get cars anywhere on demand. The pandemic shifted that. Are we back to that conversation where, there is this trend of people foregoing car ownership and just relying on these services, or is that not going to happen?
I think you're right to recall those trends from 2018-19. I can't even remember what I talked about yesterday.
He's got a great memory.
But what you're doing is tying together the whole point of this week, which is, why is the gig economy doing this in a high-rate environment? Yes, you're right. Car sales are under pressure, particularly electric vehicles, because the high-rate environment makes the financing of those purchases less than attractive. Your car payment, not just the buying of the car or the leasing, but the running of it, is the most significant outgoing you have after your mortgage, if you have a mortgage or rent. And I do think that that's a really good point. And you have to take the idea that consumers appear to be willing to spend on convenience with other data sets. Credit card, data right now is a little bit worrying. You know, I think we see that trickling up. So while the consumer's strong, let's continue to watch this ridership and willing to spend on convenience. And I think we talked about earlier this week, right? Well, what if we do have a recession? What if Lyft and Uber benefit, right? You stop spending on big ticket items like vacations and dinners out at restaurants. You start getting takeout and delivery, which Lyft does not have. But you might take a ride in a Lyft rather than, I don't know what the alternative would be. But it's a good existential question for them, along with, well, why doesn't somebody that's bigger than them that does other stuff buy them? And we also got to that in the interview too.
Yeah, hey, listen, quick Uber, up about 12% here, just off its highs, at a record. First share buyback ever. It's a big one, $7 billion share repurchase. But what's going on here? I mean, interesting. I mean, certainly got everyone's notice.
Get BI's Mandeep Singh on the show. He's always felt that these gig economy apps are undervalued. You know, Uber had its first year of profit. It has proved the doubters wrong on the business model. Its free cash flow has improved. What do investors love? They love sweeteners, and this is one hell of a sweetener to start 2024.
Yeah, pretty impressive. And like we said, definitely getting noticed among investors.
Part of the S&P 500 now, too. Can't forget that. It was added just a few months ago.
At a record as well. Hey, listen, Ed, thank you as always. Great interview and great to be able to talk with you about it. Ed Ludlow, he's co-host of Bloomberg Technology on Bloomberg Television. Catch him and Caroline Hyde at 11 a.m. Wall Street time on Bloomberg TV for Bloomberg Technology. He, of course, joining us from our San Francisco bureau.
You know, it's refreshing to see executives make mistakes in like this, you know?
Well, you know, stuff happens. What are you going to say? Like, what would you, right? I agree with you. Like, yep, we messed up. We corrected as soon as we noticed it. Done.
Maybe we stop saying basis points for certain percentages and just, you know, stick to the percentages.
Maybe we check the zeros.
Yeah, that would have. I don't know. Maybe. I don't know. I'm not a CFO.
All I know is when that came down last night, we saw this stock reaction. Understandably so. We were just like, whoa, what's going on
my
here?
jaws still dropped for 30% increase today.
It's still pretty impressive. All right, folks, right now we want to get a check on world and national news. Up to Nancy Lyons we go. She's in D.C. Hey, Nance.
Thanks, Carol. The head of the House Intelligence Committee, Congressman Mike Turner, says he has information about a serious national security threat, and he's urging the administration to declassify the information so the U.S. and its allies can openly discuss how to respond. Virginia Democratic Congresswoman Abigail Spanberger is on the Permanent Select Committee on Intelligence and spoke of threats posed by known bad actors.
Economically and militarily, China, Iran, North Korea, Russia, and that is why we must pass this national security supplemental, and particularly at a time when we do see a statement coming out from the chairman of the Intelligence Committee noting that there are specific threats at this time that there have been specific briefings about.
Spanberger spoke on Bloomberg's Balance of Power. Israeli Prime Minister Benjamin Netanyahu says he will not send a delegation to Cairo for follow-up talks aimed at securing a ceasefire with Hamas. He's again dismissing the militant group's demands as delusional. The Iran-backed militant group has insisted on the total withdrawal of Israeli troops from Gaza in return for the release of hostages. That's something Netanyahu has categorically ruled out. Lovers of Pop-Tarts are toasting the product's creator today. William Post has died at the age of 96. In the 1960s, he initially called his creation fruit scones. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
Bloomberg World Headquarters, I'm Charlie Pellet. 240 right now on Wall Street. Stocks are pushing higher. The Dow, the S&P, NASDAQ, all in the green right now. S&P up 27, still below 5,000 at 49.80. That is a gain of 0.5%. Dow Jones Industrial Average up 49, higher now by 0.1%. The NASDAQ Composite Index is up 121, higher now by 0.8%. We've got the 10-year yielding 4.26% with a 2-year 4.56%. Wall Street traders reeling from an unprecedented pickup, or unexpected pickup, I should say, in inflation, are sending stocks and bonds higher today. Spot gold is falling, though, little change, down $2.81, 19.90 the ounce, down 0.1%. Crude down 1.6%, 76.60 a barrel, while Bitcoin is surging 3.9% right now, 51,492 on Bitcoin. PNC Financial Services Group says it's going to spend about $1 billion to open new branches and renovate existing ones through 2028. PNC shares, they're up now by 1.4%. Recapping, stocks are higher with the S&P up 28 points, up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we've been talking, Tim and I have had a lot of guests, I feel like, over the last couple of weeks, Tim, when it comes to commercial real estate. We've talked about hospitality, we've talked about senior living, student housing, residential, and yes, of course, the big questions around commercial office real estate.
And it's a story that is among our most read on the Bloomberg terminal today. It's also the Bloomberg Big Take, meaning our editors have singled it out as a must-read for all. Our news team gets into how commercial property deals in the U.S. are starting to pick up. Okay, that's the good news.
Yes, but there's a catch. These deals are happening at deep discounts that are forcing lenders around the world to brace for souring loans. That's the bad news. So let's get to our interview. Pat Clark is Bloomberg News real estate reporter. He is here in studio. So Pat, you and Natalie Wong, great story, most read. Commercial property deals are finally starting to happen. We're finally getting some valuations on these properties, correct?
That's right. And for a long time, we've known that office values in particular were way down, right? You can tell by just looking around how many people you see when you go to work. We knew that was going to have a hit that was going to play out across real estate owners and banks. We didn't know exactly how much because nobody was selling anything. And so it was very easy for everyone to kind of collectively put their head in the sand.
Because we didn't really kind of know how it was all going to settle, right?
Yeah.
A little bit.
Well, that's true. In 2021, there was still debate. Are people coming back to the office? When will it happen? There's going to be a recession. You're going to want to come and look good for your boss so you don't get laid off. You hear much less of that these days, and I don't know if it's because, we haven't had the recession or if, we've all sort of, the defenders of the office have sort of capitulated and come to accept the fact that attendance is not going to be what it once was. The buildings are not going to, command the same rents when leases roll over, and thus they're not going to be worth as much money when they have to either be sold or refinanced.
Well, when it comes to people actually going back to work and using these office buildings on a daily basis, there are big regional and geographic differences here. The U.S. is a real laggard when it comes to where it stands in the world. How does that affect the way that buildings are valued in different parts of the world?
Yeah, well, it's fascinating, right? I mean, it's I think the data that we have in the story is that Asia and Europe are kind of like 75-80% of pre-pandemic levels. In the U.S., we're kind of stuck at 50%. Is that because of the type of work we do here? Is it how people sort of organize their lives? I mean, I think you could argue that it has to do with housing markets, at least. From a U.S. perspective, I would say that, the lack of housing near, downtowns is something that makes remote working really appealing. Maybe someday we'll start converting all these office buildings into apartments, and that will improve inventory and affordability, and all of a sudden it will be easier to get people back to the offices. That offices just won't be there anymore.
Or maybe we won't,
yeah.
Right? And this is kind of what we're facing with. I mean, what's interesting is it's good to see the market finally moving, but that valuation means, I think about global investors, right, who've had exposure in terms of the debt side of the equation and all the loans that went out. I mean, they're kind of caught holding this bag that now is not worth as much as it was a few years ago. So we've talked about regionals, right? Certainly in the U.S. I mean, what are some of the implications? We're already starting to see some of this play out.
these were the safe assets, right?
That's right.
In the low interest rate era, this was like an alternative to buying treasuries, was buy an office building in New York or San Francisco. You know, it's absolutely not great for the owners and not great for their lenders. And you know, I think the thing that has started to happen is we're getting closer to certainty on where interest rates are going to settle. Greater certainty, right? People are now starting to feel like they know what their borrowing costs are going to be in the future, and so that's getting them to the point. And it's both owners and lenders. More certainty on interest rates gets you to the point where you can start to take some of the punishment that you need to on valuation. Now, you know, lenders are having to put aside greater reserves to deal with the fact that they're going to take back some keys on office buildings that they're then going to have to really. What are they going to do with that?
That was my next question. So let's say you are one of these lenders who gets one of these buildings at a deep discount, or perhaps you're a buyer who's looking to buy something at a deep discount. What are we starting to see now when it comes to this commercial office space that is actually what these buildings will be used for?
The place where I come out, I guess, is I don't see a ton of reason to think that things will go better for office than they did for shopping malls. I mean, it feels like it took us a really long time, and I don't think it's a solved problem. What do you do with office? What do you do with shopping malls when people no longer want to go to them, right? And there's obviously the malls that are great and people still love to go to.
Right, these experiential places.
Experiential, or just like high end, or in the right place,
right.
You know, and
top tier properties.
We certainly have that in the office market as well. There are offices that will draw people in for a variety of reasons. Either the jobs are really good and sought after, or you know, and usually it goes along with that. They make the office a pleasant place to be, like the office we're in right now. But you know, many of these buildings are not going to be very successful in pulling people in. For a decade, we were writing, probably more, we were writing stories about the future of the mall and how do you repurpose a mall that is no longer a magnet for shoppers. And I don't know did anyone ever solve that problem? At some point, you just kind of either
kind of just dies out.
Or they become like Amazon distribution centers.
Right. At some point, but it's a lot of the times what did that is that the value of the building, the value of the mall, of the retail center, you know, became depressed, and a new buyer could step into it at such a low basis that it actually was functional as real estate. You could collect enough rents to make it work. It just didn't look at all like what it did before.
And this is where the academic outlook is really so important. You write, though, in your story, it's still too early. It's common for commercial mortgages to have 5-year or 10-year terms that amortize on a 30-year schedule, leaving balloon payments that need to be paid off or refinanced when a loan comes due. That's a fairly long runway, right? And I'm sure that if you're a lender, a commercial lender, you're going to do it. If you're a bank, you're going to do everything you can, right? Especially if it's a big loan. Like, you don't want it to default and come undone. So you kind of have some time to play with. So is this kind of a long, slow burn, or how do you see it in terms of the rest of commercial office in particular?
I hope so, right? Isn't that that we hope that it's a manageable problem?
We do. Not a crisis.
Not a crisis, a manageable problem. You space them out, right? You're going to extend certain ones. You know, sometimes something will be more critical and you'll have to take back, you'll take back that property now. But if it doesn't happen all at once and we do get relief on borrowing costs and it gets easier to refinance some of them, then things could play out in a gradual and short of crisis way, and that's what we hope.
So the lenders are going to be okay?
Not all of them, right? I mean, nobody believes. I don't think there's any way that everyone makes it through intact, but some I'm sure will.
It's interesting, though. So much we're talking about is really U.S. focus, right? Because that's where we're seeing the biggest kind of valuation reset, Pat.
Yeah, and the global exposure is through the debt. I mean, I don't think that's universally so. There are multifamily owners in Europe who've run into trouble for sure, but we've got banks in Germany and Japan and all over the place who again, they thought that financing an office building in Chicago was a safe way to deploy capital.
Right. We got this. It should be okay until it's not. Pat Clark, thank you as always. Really appreciate it. He's real estate reporter at Bloomberg News, joining us here in our studio. This story, as we said, it is the Bloomberg Big Take. It is among the most read on the Bloomberg on this Wednesday, February 14th. Hey, coming up, everybody, we're going to talk about what has fueled nearly all the wealth gained by the world's rich this year. Not the metaverse, not the weight.
What is it, Carol?
You know, those new weight loss drugs.
Okay.
I'll tell you in a moment.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Morgan Stanley planning to eliminate several hundred jobs. The first such move under CEO Ted Pick. Now, sources tell Bloomberg the cuts will affect less than 1% of employees in the wealth management business, which has about 40,000 workers and is the firm's largest unit. Morgan Stanley shares little change right now. They are down less than 1/10%. Lyft shares are surging. We've got Lyft now up by 32% after the ride-sharing company reported fourth quarter results that beat and it gave an outlook that is above the analyst consensus. Lyft right now is moving higher by 32.7%. Crosstown rival Uber, also based in San Francisco, up now by 12.8%. Uber, meanwhile, is buying back as much as $7 billion in shares to return capital to shareholders after reporting its first full year of operating profit and consistent positive free cash flow in 2023. Earnings. Home rental company Airbnb ended 2023 stronger than analysts had expected, but suggested the demand in the current quarter will not be as robust as the last. Bloomberg Intelligence says the company's room night growth suggests a moderation. Airbnb trading lower today, down by 1.3%. Zillow shares higher after the online real estate company reported fourth quarter results that did beat expectations. Right now, we do have Zillow shares higher by about 6.8%. Akamai lower after the infrastructure software company reported fourth quarter revenue that was weaker than expected. Akamai down 8.4%. Coming up after the close of trading, We will be hearing from Cisco Systems. Cisco up 0.9%. Those are our top company stories. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenivek and Carol Masser live from New York City. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. U.S. National Security Advisor Jake Sullivan says he plans to meet with a group of senior members of Congress after one top Republican warned publicly of an unspecified serious national security threat.
I personally reached out to the Gang of Eight. It is highly unusual, in fact, for the National Security Advisor to do that. I did that to set up a meeting. The Senate's not here. The 4 House members have agreed to that meeting.
Sullivan was already scheduled to meet with the lawmakers tomorrow. One person familiar with the matter says it is related to Russia, but would not elaborate. Top Republicans are downplaying their loss in New York's special election. House Speaker Mike Johnson told reporters today Democrats should not be celebrating too much. This after Democrat Tom Suozzi won the special election to replace expelled Republican Congressman George Santos.
New York 3 was what it was, but that has nothing to do on the efforts going forward.
Johnson says Suozzi ran more like a Republican on issues like the southern border and immigration. Johnson was also asked about last night's impeachment of Homeland Security Secretary Alejandro Mayorkas, the first cabinet official to be impeached in over a century. Johnson said desperate times called for desperate measures. The National Retail Federation says it's shaping up to be a record year for spending this Valentine's Day. It says consumers plan to spend a total of $25.8 billion, the third highest in the survey's history. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Tim and Carol.
All right, Nance, thank you so much. Carol Masser along with Tim Stenivek. Now to our one more thing this hour. So we've been teasing what has fueled nearly all the wealth gained by the world's rich this year. Drum roll, please.
I got 2 letters for you. AI.
Artificial intelligence. Great story on the Bloomberg. NVIDIA, the co-founder Jensen Huang's wealth has surged as a blistering rally in AI-related stocks pushed the chipmaker's market value above Amazon's for the first time. That same rally, talk about a good cousin, has minted another billionaire in Huang's own family. His distant cousin Lisa Su.
I did not know they were related.
I did not either. CEO of NVIDIA's competitor. That must make for some interesting family gatherings. We're talking about Advanced Micro Devices, who is now worth $1.2 billion after that stock doubled over the past year. You look among the best performers in the S&P, we continue to see these names pop up on that list.
Yeah, we're not just talking about NVIDIA and AMD, though. We're also talking about Meta platforms, so people like Mark Zuckerberg, because Meta is the second best performer in the S&P after NVIDIA for the second year in a row. Granted, it is only February at this point. Let's also talk about Steve Ballmer, because he's ridden the wave of optimism that has accompanied Microsoft's partnership with OpenAI. And then there's Michael Dell, who's seen his fortune surge thanks in part to AI initiatives at Dell Technologies and at Broadcom.
It's a fascinating list. You can find it on the Bloomberg terminal, but it's just pretty impressive. We talk about each year, and I feel like artificial intelligence, what was it, over a year ago, we all started getting very excited about the possibility after Microsoft made that investment in OpenAI's ChatGPT, and then all of a sudden, the whole year, it was like every earnings call. It continues to be that way. Here we are a year in.
The question that I have, and we've had some analysts talk to us about this, Carol.
You're going to have to talk to my chatbot.
Is this going to be something like, the internet was in the 90s, or is it going to be something that fizzles out like the metaverse did?
Maybe, I don't know. I think this is what we're figuring out. However, we'll say that AI has already been a part of our world, and this is taking it to a whole other level. All right, folks, coming up, if you're watching on television, the close will be up next. Markets bouncing around off our highs and lows. Coming up for us, we're going to get into the mistakes issue of Bloomberg markets and how the end of the zero rates ushered in a new era of investment era. And don't forget, we've got Cisco coming up too later on after the closing bell. This is Bloomberg. Valentine's Day. Carol Master along with my co-host Tim Stenovic. And coming up in the next couple of hours, as we just talked about, the mistakes issue of Bloomberg Markets Magazine. Love this story, how we're getting into kind of the mistakes of the last couple of years, really that end of zero rates ushered in an era, a new era of investment error. So I'm curious about kind of some of the lessons we learned, because a lot of folks got a lot of things wrong.
Yeah, well, speaking of eras, and we're not talking Taylor Swift here,
Nice.
okay? So we're not talking,
Nicely done.
you know, the football era. It's the end of an era at Apple, as its longest-serving designer is set to depart, retire.
Yeah, this is interesting. I'm looking forward to talking to Mark Gurman once again. Chinese auto parts makers are rapidly setting up plants in Mexico. We're a little obsessed with this story, and it's setting off alarm bells in Washington. There's a lot going on south of the United States, so interesting, and certainly plays into the political scenario, if you will, a narrative.
Also, we're talking a little bit about SATs a little later in the program, because colleges, well, we found out last week, they're starting to rethink them. Another college rethinking them as well.
Interesting. And remember that fake AI generated, speaking of AI, fake AI generated Biden robocall? Do you remember that?
I do remember that.
All right, well, the scammers are using it, and they're coming for you, Tim Stenovic.
I hope not.
All right, we're going to tell you how to protect yourself and your family. This is kind of news you can use. And then, as we mentioned, we've got a bunch of earnings after the close, including Cisco, so we'll be breaking that down.
All right, first up, let's get a check on today's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. Very different tone to the markets today compared to this time yesterday. You mentioned Cisco after the bell. Cisco shares right now, they are advancing 0.9%. Stocks are advancing as Wall Street gains its footing after yesterday's CPI rout. Right now, the S&P is up 28, 49.81. That is a gain right now of about 0.6%. We've got NASDAQ up 0.8%, higher by 131 points, while the Dow Jones Industrial Average is up 47, up now by about 0.1%. Russell 2000, though, by far the outperformer today. The Russell 2000 index of small cap shares up now by 2.3%. 10-year 4.26% with a 2-year 4.57%. Gold lower little change, down less than 0.1% right now. Spot gold $19.91 the ounce, while West Texas Intermediate crude is down 1.7%, $76.53 a barrel. So stocks are higher, but what about the economic backdrop? Subhadra Rajappa is head of U.S. rate strategy at Societe Generale.
Really, what has surprised us fundamentally is the strength in growth. I mean, the third quarter and the fourth quarter were extraordinarily strong on the growth front. And that momentum seems to be carrying into the first month of the year and perhaps into the first quarter. And that's really what's changing our view on what the Fed will deliver for cuts for this year.
And you can hear more of the conversation on the Surveillance podcast. Again, Cisco, after the close of trading today, its latest quarterly report will give investors a sense as to how the company is coping with a sales slowdown and whether it's making cutbacks to stay lean. Cisco up now by 0.9%. Recapping, stocks higher, S&P at 49.81, up by 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Carol Master, along with Tim Stenovic, live here on Bloomberg Business Week. It is a new era at Apple. And no, we're not talking about the Vision Pro headset. We're talking about the key design group at the company led by the iconic Johnny Ive, who he left back in 2019. And now Apple's longest-serving senior industrial designer, Tim, is leaving Apple as well.
Off to LA we go, where we find Bloomberg News. Chief Technology Correspondent Mark Gurman. Mark, good to have you as always with us. I saw this story cross and I thought to myself, okay, we got to get Mark Gurman on the program to talk about it. Does this matter at this point? Obviously, it's the end of an era, but there's something in Apple's DNA when it comes to design. Is that gone, or does that stay in Apple's DNA?
So Apple, of course, has replenished their design team, but it is pretty notable. It's your longest-serving designer. He's been at Apple for 32 years. He actually started at Apple the first day as Johnny Ive. Johnny Ive, obviously, he set the design standard and the aesthetic for Apple for many years, from the original iMac to the iPhone, the iPod, the iPad. The Apple Watch was his baby. He was heavily involved in the industrial design and development in the underlying technologies in the Vision Pro. So certainly this design team, it was this close-knit group for 2 decades of about 24 people. And now, out of the 23 people who were part of that design team under Johnny Ive, 18 have now departed, with nearly half of those going to join Ive at his new consulting and design firm, Lovefrom. So certainly a very, very notable set of departures over the past few years, really finishing at this Bart Andre departure, 32 years, right? So this is a big deal.
Okay, wait, I want to go to this design firm that Johnny Ive has now, because if he's been able to recruit a good portion of his old team at Apple, I got to wonder what they're up to at this design firm. What do we know about it? Who do they work for? What are they working on?
Yeah, so this design firm is designing a car for Ferrari. It's designing jackets for Montclair. They've done work for the British government. They are doing work for Airbnb. So certainly they have a lot of very high-profile clients. Potentially the most interesting thing that Lovefrom is doing right now is Johnny Ive and his firm, they're starting a new company with OpenAI's Sam Altman. The idea is that Altman will bring the underlying technology from OpenAI for generative artificial intelligence and large language models. And Ive and Lovefrom will bring that engineering prowess, that user interface design ethos, bring those two things together to see what types of artificial intelligence hardware they could develop. They've talked about things internally, such as home devices or home robots. So it's certainly something that I think is going to be a big deal in the coming years.
All right. Okay, so maybe something to watch, and it sounds like they need a little bit of a runway here, right, in terms of getting some big stuff off the ground. Having said that, so what's been the impact on Apple? Because you look at, Mark, this company, I mean, has it lost any of its mojo? I'm looking at what? Ive's been gone for about 4 or 5 years. Apple's moved higher. It's now a $2.8 trillion market cap company. So what have they lost in the absence of him, or have they kind of figured out how to move forward?
I think they've moved forward. I think you've seen some key design changes to their product since Ive's departure. I think you've seen more of a shift to function over form, whereas under Ive, there was sometimes some form over function, and form over function means a priority of design over usability. The MacBook Pro now has gotten thicker. Why? More battery life, faster processing, additional ports, more capabilities that people who want to buy a MacBook Pro are going to want one now because of that. So you've seen sort of that shift. They still have pretty cool designs, but you're pushing the envelope on functionality a little bit more than you may have under Ive. So there have been some improvements there, but still the design aesthetic, right? That's still so core to Apple. Things like the Apple Watch Ultra, things like the Apple Vision Pro. That overall design still originated under Ive, and we haven't really seen an entirely new product portfolio or family or revolutionary new feature developed yet under this new school design team approach. So things are in the oven for so long at Apple, it's going to take a while till we truly are able to know what the differences are.
How long? A couple years? A year?
Well, things like the Vision Pro, for example, I mean, the Vision Pro development started back in 2015. I've left in 2019. The Apple Car has been in development since around 2014, right? And so his hands are all over these two major new product categories for Apple. The car, obviously, coming later in the decade.
A good reminder of the product development cycle at Apple or any company and just how long it takes. Hey, speaking of the Apple Vision Pro, got to ask you while you're here, Mark, about the reports that we're starting to see pop up in a couple different publications online that are sort of doing these trend stories about people returning their Apple Vision Pros. Have you seen these? And I'm wondering, like, what, you know, if you're thinking of this as any sort of bigger deal, or if it's just a few very vocal people who are writing about their what they call disappointing experiences using the product.
Yeah, I have not seen any of those articles. Certainly, when a new Apple product comes out, there's going to be a lot of people who are wanting to try it out. There are certainly people who are going to want to see what it's like, maybe to buy and then return. Obviously, the price is very high, but I think we're going to need to see, you know, perspectives from more people to understand if we have a trend here.
You know, I got to tell you, a friend of mine texted me last week, and he was like, Tim, I just tried the Apple Vision Pro. This thing was so cool. You got to try it. And he was like, it was like the excitement that he had when he, you know, tried the first iPhone, I think.
Well, Mark,
he went in, he scheduled an appointment just to go try it. He didn't even buy it.
I think that's kind of cool. Mark, the longer you've had it, how are you thinking about it, you know, feeling about it?
Yeah, I'm adjusting to it. I have it, my little show and tell. I have it right here, and I've been using it other than being on here with you both, right? So I'm working through it. It's a little heavy, but I'm working through it, and I'll have more thoughts coming.
All right. So appreciated, as always. Mark Gurman, Bloomberg News Chief Technology Correspondent. Check him out on the Bloomberg, certainly at Bloomberg.com, and, of course, on Twitter at Mark Gurman. Mark, thanks so much. Really appreciate it. This is Bloomberg.
We could never reach a star without you, zero, my hero, zero.
All right, everybody. Now let's get to, what people have talked about, kind of years of regret over bad calls when it comes to forecasting about the U.S. economy, recession calls, inflation calls, transitory, anyone, by the way. It's not been easy, even for Fed Chair Jay Powell. Remember back in November 2021 when Chair Powell addressed the Senate Banking Committee about that testy word, transitory.
Articulated, I think, clearly has been met now. You're absolutely right. Inflation has run well above 2% for long enough. The word transitory has different meanings to different people. I think it's probably a good time to retire that word and try to explain more clearly what we mean.
All right, it's not easy being the Fed chair, really many. The end of zero rates, ushering in a new era of investment era in particular. In Bloomberg Markets, it's the mistakes issue, how many missed the market over the past 2 years. I love that you guys are doing a mistakes issue. With us is the editor of Bloomberg Markets Magazine, Pat Regnier, here in our Bloomberg Interactive Broker Studio. A lot of people missed. This was an era unlike, and most had never seen before.
Yeah, we spent a whole issue looking at mistakes, but one of the things we wanted to focus on was sort of what happened in this time period after the liftoff from rates, which seems to have scrambled everybody's compass. And it's not just a matter of, I think at first people weren't sure how bearish to be, and then maybe they were wrong about how bullish to be. And we've just sort of watched like all of these different switchbacks, both for forecasters, economists, traders. I mean, just kind of, how do you get a handle on big tech stocks, for example? So we just went back and had a look at this. And part of the logic of the story, but also the whole issue, was not to kind of point and laugh, although that can be fun.
I think there's a German word for that. I think there is.
You'd also be pointing at a lot of people.
Absolutely. It's really, we have the instinct that if you're a trader, if you're in finance, if you're in markets, mistakes are a part of your work. And everyone I've ever met who's good at it learns from it, and they'll talk as much about their mistakes as they will about their
So that's a really good point, and that's a big takeaway. Another big takeaway that I had after reading this was that there is so much we just don't know. Right. And as Carol mentioned, that's what makes a market. And we have people come on the program every day who talk with conviction that, okay, this is what the Fed's going to do, this is what rates are going to do, this is what inflation is going to do, this is what the stock market is going to do. And they really seem to believe it. It's like they know it.
Got it wrong. This is what happends, right?
And it's okay. You're saying that's the way this works.
Yeah, the great economist Kenneth Arrow told a story in his memoirs about doing weather reports for the Army. And the general wanted to know, what's the weather going to be like 2 weeks before the invasion? And the answer was, we cannot make a forecast 2 weeks before the invasion. And the general said to him, we understand that, but we need it for planning purposes. And I love that story because we all need forecasts, and we all need to have a theory for planning purposes. We can't get out of bed in the morning if we don't have a forecast.
I thought that was really interesting, right? Because we talk about forecasts all the time, whether it's earnings, whether it's economic forecasts. This idea of you need this to kind of figure out a narrative, because within that narrative, there's probably going to be some really truth to the way forward, right?
Yes, and then or at least it's a way of gaming out catastrophes and kind of planning out what are going to be your contingency plans and kind of trying to think ahead to the future. That having been said, you can make some pretty disastrously bad trades.
That's true. That's very true.
You know what I'm just thinking, Carol?
What?
How did we open the show in the 2 o'clock hour? We talked about the error that Lyft's CFO made, right? I don't know if you saw this, Pat. This is like a perfect day to be talking about this issue, and this was an issue where they said they made an error, 500 basis points versus 50 basis points. They literally left another zero on there when they made their projection, and it caused the stock to move higher. these things happen.
That's right. And I've never cursed a deadline as much as when right after I've closed the mistakes issue, that happened.
Okay, I'm sorry.
That is a heck of a story.
Seriously?
The lesson, don't talk in basis points.
That's what I said. I said, let's go back to old-fashioned percentages.
Exactly.
Well, it's interesting. And you guys kind of, in doing your coverage, you talk about the bond market, you talk about the equity market, you talk about the Magnificent Seven. Like, you really go through because it really, you saw it play out throughout all the different markets and all the different asset classes.
Yeah, all kudos to our newsroom because we really worked with a lot of the reporters across the Bloomberg newsroom, and every one of them, I sent out the memo asking for mistakes, and everybody had a great tale, and some of them were probably surprising to a lot of people in the U.S. I mean, one of I think the most interesting ones is the huge mistake made by SBB, the Swedish housing company. We all know about everything that's happened in China with property, but this is at a smaller scale. The ways that you can get in trouble, kind of thinking that an interest rate situation is going to stay the same, and you borrow to the hilt, expecting that the financing will always be there, and then suddenly it's not.
Can we, at this point, though, in your opinion, say that the Fed has made a mistake?
Well, we talk about that. It's interesting. The Fed's forecasts were consistently wrong, and yet they seem to be. It's at least in contention that they'll stick the landing here. We'll know when we know, but we so far seem to continue to have inflation coming down, maybe not as fast as everybody expected, and we've been able to do it without having painful unemployment like that. At the moment, that looks great. Now there's a warning in the story that somebody says it always looks like it's going to be a soft landing until it's not.
Right, that's right.
Good point.
You know what I thought also about this, the importance of it, and this is why I love talking with people who have reported on or been investing in a lot of different market cycles. You learn each time we go through some crisis or some anomaly or seemingly anomaly about when we get to another point. You're like, well, remember that time? Like, we were fooled. Like, I feel like this is so helpful. We do learn from all of this.
Yeah. Yeah, it was fun to do it and to review all of these all of these errors that professionals make all the time, and every journalist in the newsroom can has their own stories and can sympathize.
I already said this is hard for Carol to relate to because she's never made a mistake. So I don't know. So congratulations for
all the time.
Yeah. No.
Crypto, though, you left that to another.
we that had to be a whole story all on its own, and that's actually a fun one because it's like what. What is it still a mistake at 50,000?
Really thoughtful piece as we try to make sense of the environment, and where we continue to see a fair amount of volatility in the narrative. Pat Rainier, editor of Bloomberg Markets Magazine. Check it out.
Bloomberg World Headquarters, I'm Charlie Pellet. 3:21 on Wall Street. We begin with a number of developing stories. First of all, police in Kansas City say shots were fired around Union Station at the Super Bowl parade. Police say multiple people were struck in the shooting, and they have taken at least 2 armed people into custody. Also developing at this hour, New York City is suing social media platforms over teen mental health concerns. The New York City suit targets Facebook, Instagram, TikTok, YouTube, and Snapchat. Again, those headlines right now on the Bloomberg Professional Service. We've got the Dow, the S&P, and NASDAQ all advancing. 38 minutes now to go ahead of the closing bell, with the S&P up 34, up by about 0.7%. Dow Jones Industrial Average up 92. That is a gain of 0.2%. NASDAQ up 148, up by 1%. And the Russell 2000 now up by 2.4%. So a dramatic turnaround from this time yesterday. 10-year, 4.26%. The 2-year, 4.57%. Gold down $2.50 the ounce to $19.90. A drop there of 0.1%. While West Texas Intermediate crude is down 1.8%. 76.47 for a barrel of WTI. Bottom line here, stocks are advancing. The S&P, though, at 49.88, still below 5,000. Tracy McMillian is head of global asset allocation at the Wells Fargo Institute, and she says it is not unreasonable to be bracing for a pullback.
The S&P 500 has been up 14 of the last 15 weeks, and so a 10% correction at any point during a given year is a pretty normal occurrence. So we'd want to wait for maybe a bit of a reset in equity prices here before we want to move some of that short-term fixed income back into the equity markets.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Lyft surging after earnings. Lyft shares, topic we've been discussing quite frequently today. We've got Lyft up 34.6% right now. Uber, also based in San Francisco, up by 11.2%. Recapping, stocks are higher. S&P up 35, up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, something Charlie mentioned, just want to update. There are reports, Kansas City police saying multiple people were struck in a shooting. This was a parade, a victory rally for Kansas City Chiefs that was underway in Kansas City. The police saying that they took 2 armed people into custody. They say the shots were fired around Union Station specifically, and again saying that multiple people were struck in a shooting. So getting some more details. We'll keep you up to date as more is known.
Well, check out the new Bloomberg Business app. It features Apple CarPlay and Android Auto. You can listen to Bloomberg Business Week and all of our Bloomberg radio programs at any time. Just download the Bloomberg Business app on your smartphone and connect your phone to your car. It's free in the Apple App Store and on Google Play. Okay, Carol.
Yes?
What do Shanghai Bayon Precision Automobile Component Company, Suzhou Dongshan Precision Manufacturing, and Xinjiang Yinlan Machinery Company all have in common?
Well, I cheated because I read the story.
Oh, okay.
But
the quiz doesn't work then.
All are kind of finding a home base in the same area.
Okay, you're right. These are all Chinese automobile component companies that have recently set up shop on the outskirts of Monterrey, Mexico. So you're spot on.
Yeah. In fact, Chinese auto parts makers are rapidly setting up plants in the region, which is only about 150 miles from the U.S. border. The value of Chinese auto parts made in Mexico specifically and exported to the U.S. reached $1.1 billion last year. That's up 15% over the previous year, according to previously unreported preliminary data out from INA. That's Mexico's National Auto Parts Industry Association. So we're getting some numbers on exactly what's happening.
Amy Stillman writes all about it. She's Bloomberg News Mexico business reporter. She joins us from Mexico City. Amy, great story. It's so funny. Carol and I were literally just talking about this yesterday, this exact thing. We spoke to some folks who had been in the Monterrey area and were just shocked at what they saw in terms of auto parts manufacturers. So you're reading minds here. This is great. One thing we didn't talk about with them, though, is why this surge has set off alarm bells in Washington. So give us the details there.
Sure. Thank you, Tim. And I appreciate the effort with the names. Very good job on the pronunciation. So, yeah, certainly we're seeing a pretty big surge of investment of Chinese auto parts companies into Mexico. This is a trend that really began around the time of Trump's protectionist tariffs. which essentially were designed to keep the Chinese out. We started seeing in around 2021 companies starting to set up in a bigger way in Mexico in order to avoid that 25% tariff. Now, since then, we've seen other measures by the U.S. One, for instance, is under the Inflation Reduction Act. There are some new measures against foreign entities of concern, which also includes, companies that have China origin and ownership. And so the reason for this is because, as a essentially trade war heats up between the U.S. and China, there is a lot of concern over the fact that China is sort of winning the race on electric vehicles, that they have a very efficient, very large supply chain, and that it will be very difficult for U.S. companies to compete. There are some security concerns that should Chinese vehicles enter the U.S., that this could also present a security risk or spying risk. And so really this has been very much a sort of whack-a-mole policy where the U.S. is trying to keep the Chinese out, and the Chinese are finding some loopholes.
So talk to us about those loopholes. You kind of get what they're doing, right? If the U.S. imposes a certain policy, they're trying to, is this essentially a go-around? But having said that, the auto supply chain, it's a global one, and you understand that their end users need these parts.
Well, exactly. So the sort of way that the Chinese have been able to get around some of these measures by setting up shop in Mexico is just quite simply that, if they're producing in Mexico, they're not producing in China. And so some of these rules, which are really based on the, country of origin, won't apply. So they are considered, North American content. And then I would also say at the same time, that it's very difficult to implement these measures, particularly along the supply chain, because many of these big U.S. automakers rely on Chinese parts makers because the parts are considered to be high quality and cheaper, and it's very difficult to block them out of that supply chain.
I want to go back to, though, what is a key part of the story, and that is certainly one of the reasons why people who are reading on the Bloomberg are clicking on it big time, if you will. Elon Musk's role in maybe advising, urging, suggesting that some of these Chinese suppliers head to Mexico to do this. Talk to us about what we know on that front.
Sure. Well, certainly that has been part of the trend, the catalyst. We know that Elon Musk had proposed opening a gigafactory in Mexico, and that, as we understand it from our sources, these suppliers were actually asked directly by Tesla to get established in Mexico to start supplying to Tesla. Now, obviously, the gigafactory planned in Mexico is still some time away from kicking off. Construction hasn't really started yet. Mm-hmm. And so a lot of these suppliers are moving to Mexico in the sort of, hope that they're going to be supplying to Tesla's Mexico factory, and some as well are supplying to the factory in Austin. So yeah, certainly Tesla has been a part of this. We know that Tesla, gets a lot of its, supply chain from Chinese suppliers in Shanghai. And so what we've really seen is that Tesla has really tried to replicate that supply chain in Shanghai, to be able to compete more effectively.
One thing that surprises me, though, is it's not necessarily in Elon Musk's best interest to have Chinese auto manufacturers so close to the U.S., like BYD, for example. They're a huge competitor to Tesla. What happens if at some point these cars can be sold in the U.S.? That would take market share from Tesla, no?
That's a great question. And certainly this is the concern that the auto parts companies from China, that this is a stepping stone, that you could start to see, these electric vehicle makers from China bringing their cars into the U.S. market, which, as you point out, would create greater competition with Tesla. Now, the aspect of this, that perhaps Elon Musk is calculating is that is still quite a ways off. First, the companies will need to establish production plants in Mexico. We have heard, that BYD is looking, that Chery and MG and some of these other electric vehicle makers, but as of right now, there are no production plants, and so that whole process, analysts estimate could take, between 5 to 6 years. The electric vehicles would need to meet the U.S. specifications, but it certainly is a threat. It just might not be the most imminent threat, and perhaps not the most imminent threat in Elon Musk's mind.
Right, but you do wonder if you're Mexico and you're balancing, you want that, look at what's going on with China, you want that foreign direct investment. You don't want to alienate the North American auto manufacturers, the U.S. auto manufacturers who are, setting up shop there, or some of the parts suppliers that are working there. Like it's a delicate balance. So it'll be interesting to see how much more of a presence we have when it comes to Chinese suppliers in Mexico, because right now it does seem like they're going to continue to amp up their presence. Amy, thank you so much. Amy Stillman, she's Mexico business reporter at Bloomberg News. She's joining us on the phone from Mexico City. And this story certainly catching our attention today.
Hey, also catching my attention is what's going on with the equity market. The S&P 500 up toward its best levels of the day, up more than 0.7%. The NASDAQ up more than 1%. The Dow up 0.3%. Hey, let's get a check on the latest world and national news and the latest in Kansas City with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. A Kansas City fire official says 8 to 10 people were wounded in that shooting this afternoon at the site of the Kansas City Chiefs Super Bowl victory parade. This happened at Union Station just after the parade had wrapped up. 2 armed people have been taken into custody. Well, today marks 6 years since the school shooting at Marjorie Stoneman Douglas High School in Parkland, Florida, that left 17 people dead. This will be the last anniversary before the building where it happened is demolished. Danielle Gilbert still remembers watching as 4 of her classmates were shot.
That classroom is such a huge part of who I am now. 6 years later, I'm still living my life as best as I can.
This building is set to be torn down this summer. The head of the House Intelligence Committee says he has information about a serious national security threat, and he's urging the administration to declassify the information. National Security Advisor Jake Sullivan today declined to discuss the nature of the threat.
I am confident that President Biden, in the decisions that he is taking, is going to ensure the security of the American people going forward, and I will stand here at this podium and assert that, look you in the eye with confidence that we believe that we can and will and are protecting the national security of the United States.
Sullivan says he'll be speaking with top congressional leaders tomorrow. House Speaker Mike Johnson is taking questions today following the impeachment yesterday of Homeland Security Secretary Alejandro Mayorkas. It was the second time the House had taken a vote. This time they had enough yeses. Johnson says Mayorkas' handling of the southern border is an impeachable offense.
Desperate times call for desperate measures. We had to do that. He has abdicated his responsibility, he's breached the public trust, and he's disregarded the laws Congress has passed.
It is unclear if and when the Senate will take up that impeachment. Again, repeating our top story, a Kansas City fire official says 8 to 10 people have been wounded in a shooting at the site of the Kansas City Chiefs Super Bowl victory parade. Global news, 24 hours a day and whenever you want it with Bloomberg News Now.